Businesses have been ready to reopen faster than workers have been ready to come back.
We see a very high number of people who are quitting their jobs. We only see that when people feel very confident about the job market.
I do think we're far enough along that a lot of that scarring should begin to dissipate.
I would argue every data point now is going to be a market event because they've put the market on notice.
We've missed on inflation for so long that the Fed is really focused on achieving its inflation target.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Bloomberg Surveillance on radio, on television. Without John Ferro and Lisa Abramowicz. Romaine Bostick coming off the Boston Pops in with us today, and Matthew Miller from Berlin picking it up as well. Lots to talk about. We got some major market moves here. The repo market is something Romaine and I are looking at, and also, of course, the real yield is really something. But Romaine, I've really got to go to a close-like feel here on the Surveillance Open and go to Didi. Matt Miller picked up 8,000 shares of Didi because Ferro was on one of his vacations. Are you kidding me?
Well, Matt had perfect timing here. Exquisite, Matt, here. I mean, this is absolutely stunning here. Not only because the turnaround, I guess, what you're seeing here in the market, the ADR is down 22% here in the pre-market. But now, I guess, this report out of Bloomberg News saying that apparently authorities in China had actually reached out to Didi at least 3 months ago about delaying this IPO. And now there's a lot of questions here as to why that information wasn't relayed to investors prior to this. The fact that they went ahead with it. There are a lot of reasons. Go ahead, Matt. I mean, because I know you're stuck here.
How about giving me a heads up as an investor, before the IPO, if the Communist Party says don't do it, I need that kind of information or I'm going to be calling my law firm later.
It's a new kind of finance, and I want to go to a subset here, folks, as we try to get the show started. And the basic idea here is, what do you do if you're a Western bank in Hong Kong off of this action? Do you move to Singapore or some other geography as well? That'll be something maybe for 2022 to discuss. We're going to look at the equity markets here, a 4-day work week in America, and a lot of it wrapped around what the markets are doing. Romaine, what is your observation as we're 1 week out from the earnings season with JP Morgan?
1 week out from an earnings season, coming off last week's jobs report, you actually have a scenario here where a lot of people do think we can push higher. You're looking at 4,300, 4,340 on the S&P 500. That's pretty much around the average of where most strategists thought we would end the year. You now have some folks nudging their price targets higher here. The idea that there is more left in this tank, Tom, at least here in the U.S.
Abby Joseph Cohen scheduled to be with us later this week. We'll see what she and David Costin feel, the Goldman Sachs view. The VIX 15.83. Looking at the bond space, it's absolutely fascinating to see yield. I want to do the nominal yield here very quickly, 1.4204. Will we get a 199 on 30-year bond? We're not there yet, 2.04. But what I would really look at, Matt Miller, is the inflation-adjusted yield. The nominal yield less the inflation expectation is the so-called residual, and that is completely confounding the zeitgeist of 90 days ago.
Yeah, absolutely. I mean, the big change, first of all, the nominal yield dropping it to like 142 right now, and then a core CPI up above 3% is a real concern, right? So, but you still have people buying this debt because other investors outside of the U.S., this looks so much better than negative 20 basis points on the bunds.
No, maybe there. I'm watching the Swiss 20 here just for Matt Miller as well. It's still positive, but if that was to tip negative, that would be another sign here. One more comment here before we get to Ben Laidler, and that would be on oil. I mean, I look at this, Romaine. What have the oil stocks done? Is Exxon behind Brent crude, or are they out front?
Well, a little bit out front, and you have to understand here, really over the past year, there's been a big disconnect here between the prices that we're seeing actually in some of these oil and exploration companies and the price of oil itself here. Those companies have actually been out of front of this. So the reaction, I guess, the correlation, if you will, Tom, not quite as one-to-one as you would normally think it is here. But this is a major story, and I know we're going to talk about it a little bit later in the show.
I was having the obligatory Cuban seed last night celebrating Independence Day, and all I can tell you, folks, is the guest quality through the week is just something. Stay with us for conversations here on economics, finance, and the stock market. And we start wicked strong, as they would say, in first place Boston. Benjamin Laidler joins us with eToro, their global market strategist, smartest guy on the block right now. Ben Laidler, reaffirm a double-digit 2021.
Yeah, definitely. I think we continue to underestimate the growth recovery. I mean, we're going to go into second quarter earnings next week. Consensus says 65% year over year. That'll be the peak year over year, but I still think we're going to beat that. And I think the next earnings story is next year. Expectations for next year just look far too low, 12%, when you've got 7% nominal GDP growth. So I think there's still upside to this sort of growth story. You know, PMIs are still, at 60, very, very high levels. So I think the growth story has further to go. And that's your insurance policy to the biggest risk which is out there, which is that valuations are still very high. They're going to come down, probably as the Fed sort of gradually tightens here. But I think that sort of growth story is more than going to offset the decline in valuation. So yes, I think there's, you've had a remarkable first half. You're going to make less money than that in the second half, but there's definitely a positive return on the story here, and I think people should stay invested.
So, Ben, when we talk about the growth, obviously the economic growth here, a lot of people are starting now to sort of look at the idea that the pace of growth, earnings growth, I should say, and the pace of revenue growth for a lot of the companies, particularly here in the U.S., are going to be enough to overcome any sort of concerns about the Fed, inflation, et cetera here. Are there certain pockets, though, of the market, certain industries that you think are going to be a little bit more resilient than others?
So, if you're in the bullish sort of growth camp that I am, you're looking for, who gives me the most leverage and the most exposure to this growth story. And that's the cyclicals, it's value, it's financials, it's everything that's pulled back in the last sort of month or so. So I really think you're being given a sort of another opportunity here to step up and buy those sort of pro-growth names. So, US earnings next week overall will be probably up sort of 65% for the second quarter, but these cyclicals are going to be up, over 100%. You look internationally, Europe, Canada, I mean, a lot of these other markets, which are sort of much more depressed, they're coming off much lower bases. Those overall indices are going to see, 100% earnings growth rate. So, I'm bullish on the sort of reopening story. 25% of the world is vaccinated. So I think this reopening story is only just sort of beginning, and that's pushing growth with it. And I think the places to get exposure to that are these sort of cyclicals and international markets.
Our Javier Blas laid out an argument for structural supply constraints in oil pushing the price higher. Of course, we've also seen the OPEC saga do that as well. But do you see other areas where we have real structural shifts in terms of inflation? I notice you've got the German election and the COP26 summit on your docket of things to watch.
Yeah, so I think what's going on in the oil space and just sort of more broadly, this sort of green transition, this move to sort of renewables is absolutely fascinating. I think all the ingredients are there for, for $100 oil. You've got this, heavily backwardated futures curve, which is not incentivizing anybody to, drill for more oil. You've got, rig counts in the US, which are rebounded maybe half as much as you would have expected with sort of prices, at these levels. So, I think there's a real supply constraints are coming through, and that's going to drive, that potentially drives oil prices up even further. And I should say the same goes for the broader commodity space. I mean, we're focusing a lot on the sort of demand rebound right now, but, commodities have been out of favor for a decade. That means that no one's been investing in the commodity space for a decade. So I think you have real supply constraints. But it's just worth saying, particularly on oil, the higher prices go, those are the sort of seeds of its sort of own destruction, if you like. I mean, ultimately, that will incentivize supply to come back to the market. That's going to incentivize even more the sort of move to renewables. So, enjoy it while it lasts. But, ultimately, the market is going to adjust.
Ben, you have been on a magical 3-year tear. There's just no other way to describe it. You've got other people participating in the bull market, but nobody's nailed it like you. Are we overemphasizing the so-called rotation from technology to cyclical? Is that like emphasized too much versus just being in the market?
Yeah, I think so. I mean, I think cyclicals lead here because, I think the growth story has sort of further to go. But I think I think you need to be invested. I think, the tech story is just a different story. It's slightly longer term. It's a bit more structural. Valuations are obviously sort of somewhat higher. But these are, the fortress balance sheets, very strong growth. I mean, big tech last quarter grew earnings 120%. I mean, it's just mind-blowing for companies that size coming off the year they'd already had. And I think it just speaks to sort of some of the earnings power. So, we can have a debate about, what am I prepared to pay for these things? But I don't really have a problem with that sort of earnings power, these margins, these balance sheets, more dividends, more share buybacks. I mean, it's a different story, less sort of juice to the recovery we're seeing right now, but it's still a very attractive story.
Ben Laidler, thank you so much. Greatly appreciate you getting us started here this morning with eToro Global Markets. Can't say enough about the sharpness and terseness of his morning note as well. Romain, you and I, our knowledge of soccer is really weak.
Oh, my God.
Miller was dumber than us, and then he went out and married an absolutely gorgeous Spaniard, so we know what he's doing today. Matt, is it true that if the next son is issued, you're going to name him Ferran Torres Miller after the great Manchester City wing for the Spanish team? Is this true?
It will be a debate in our household. I'm for England, which is almost treasonous to my wife. She is literally in Spain right now, getting ready to watch the game tonight. And if they lose, she might not talk to me for a few weeks.
I mean, it didn't work out for Henry VIII, Matt, would be my brief here. This is a lot of fun. Matt Miller, tell us what Euro 2020 means for Berlin. What's the tone there? Is everybody focused on every individual game, or is it every country for itself?
Well, I mean, Berlin is an incredibly international city. Nonetheless, the media absolutely excoriated Joachim Löw, the German coach, the German manager, when he lost to England. But yeah, Berlin is mostly hipsters from Brooklyn and from, the city of London. There are fewer and fewer Germans here than you would imagine.
Very good. Matt Miller with the analysis from Berlin. Romain, we got through that. Do we have to do it again here across the Surveillance
I think that covers our soccer portion.
I don't think
Car talk is coming up. Car talk is coming up.
Obligatory car talk and even bit dog talk here at the end. What's so important to note here is this is going to be a lot of fun. Italy and Spain today. I believe Mr. Ferro is focused on a different team than Mr. Miller's focused on. My deepest sympathies, Matt. I can't imagine what Mrs. Miller's thinking right now.
Is anyone rooting for Denmark?
Yeah, no, Denmark will do tomorrow. Jens Nordvig is totally pumped.
Okay.
Dan Alpert coming up. Must watch and listen with Westward Capital. Alpert on the Age of Oversupply.
With the First Word News, I'm Rishika Gupta. Oil jumped to the highest price in more than 6 years today. That's after a bitter fight between Saudi Arabia and the United Arab Emirates blocked a supply increase and plunged the OPEC Plus coalition into crisis. The coming days will determine whether the battle will escalate into something as destructive as last year's price war. In the UK, business lobbies cautiously welcome Prime Minister Boris Johnson's plan to ease coronavirus restrictions on July the 19th. Still, there's a heavy dose of skepticism. It's good news for pubs and nightclubs, but there's also the issue of liability surrounding infections in the workplace. President Biden and Russia's Vladimir Putin face an early post-summit test in Syria. An agreement over international aid corridors into the country is set to expire this week. At last month's summit in Geneva, President Biden asked Putin to keep aid flowing into Syria. That will require the two nations and other members of the United Nations Security Council to reach an agreement. In South Florida, rescuers searched through the rubble after the last of that collapsed condo building was demolished. That allowed crews into previously inaccessible places. 4 more victims were discovered, raising the death toll to 28 people. Another 117 are still missing. Shares of ride-hailing giant Didi plunged in pre-market trade in the U.S. Chinese regulators have ordered that the company's platform be removed from app stores. Beijing has tightened its grip on sensitive online data and cited security risks as the reason. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
A year ago today. So today, while the virus hasn't been vanquished, we know this. It no longer controls our lives. It no longer paralyzes our nation. And it's within our power to make sure it never does again.
Symbolism is everything. And on the 4th of July, the 245th anniversary of this nation, what we see at the South Portico from the president, so different than what we saw from the previous president. Mr. Biden with the stark single American flag, and the flag of the office is, well, more low-key, more subdued than what we saw in the previous 4 years. A different 4th of July at 1600 Pennsylvania Avenue. Romaine Bostic and Matt Miller with me, John Ferro and Lisa Abramowicz. Off. I think John Ferro may be on Crete. I'm not sure about that. It was a big debate about the Greek islands the other day. Giving us huge assistance on the Greek islands was Anne-Marie Horton, who wishes she was there. She's in Washington, hot, steamy, and what's known as the summer of Washington. I mean, it's an odd day. The 4th of July coming out of it, Anne-Marie, is so odd there. And I love what Paul Krugman said off of the jobs report, that it's a morning in Joe Biden's America. Does President Biden have the time now to celebrate?
Well, good morning, Tom. You know, part of that speech he gave over the weekend, the 4th of July speech, was partially a celebration, but also really a nod to the fact that the U.S. has still a lot of work to do when it comes to vaccinations. You know, this administration didn't even meet their goal. It was just short of it to get 70% of one dose, at least for all adults, by July 4th, and it's 67%. And that's really going to be the talk of this week. And the president will be giving an address on the COVID response, 2:45 p.m. this afternoon. And also you had the White House COVID coordinator on the Sunday shows this weekend talking about the fact that this administration wants to double down and make sure that the Delta variant that is spreading in the United States, that those communities that aren't vaccinated get the resources they need to get there.
Does anything happen on infrastructure this week? I mean, it's a 4-day work week and a sleepy July in Washington. I don't buy it for a minute. There's got to be a lot going on infrastructure.
Behind closed doors, I think you're going to see phone calls, because we do know that Congress is in recess, Tom. So this will definitely be behind closed doors. But also, the president is going to be in Crystal City, Illinois on Wednesday, and he's going to be talking about infrastructure, the American Families Plan. So there will be officials wanting to really do the PR for this infrastructure deal throughout the week.
In terms of infrastructure, how does oil play into that, Anne-Marie? I mean, I know it's really an OPEC issue that we're focused on, you're focused on with your amazing interview yesterday, but how much does the White House care about $77 oil?
Well, on Friday, we already heard Jen Psaki talking about the fact that the administration is worried about increasing prices of oil, because what does that mean for consumers at the pump? Of course, it's a precarious position when you have a recovery taking hold. The price of oil can affect everything from the goods, also Americans filling up their tanks, traveling, etc. But over the weekend, Jennifer Jacobs from our Bloomberg News team at the White House is reporting that there are concerns and that officials are making phone calls to the most relevant capitals, a la Riyadh and Abu Dhabi. So there does seem to be concerns about this spat going on at OPEC right here in Washington, D.C.
What about the possibility that the UAE forces a rebalancing of OPEC? Is that going to happen, Anne-Marie?
What you could potentially see is that they reforce everyone to come back to the table and renegotiate their baselines. This is key for Abu Dhabi. They have spent billions of dollars to expand infrastructure and their production. They have the Murban contract now in Abu Dhabi, and they want to flex their muscle. They don't want to be in the shadow anymore of Riyadh. So right now they're pumping with a 3.2 baseline. They want to get to 3.8. If they do that, though, prepare for the others to come. And Prince Abdulaziz, the Saudi oil minister, pretty much said that to me. Iraq and the others would likely line up. So then it would take months to rebalance all of the baselines for all the OPEC Plus members.
All right, so, I mean, this raises a question here, Anne-Marie, and I think Matt sort of touched on it, the idea of what the American influence is right now, or I guess overseas, whether it's dealing with OPEC. And there's, of course, also the situation right now in Afghanistan with the pullout of troops, a commitment, of course, made by the previous administration that Biden himself has appeared to have fulfilled or is on the way to fulfilling. We're already getting reports there out of Afghanistan about issues in the northern part of that country right now with the reemergence of the Taliban's presence.
Yeah, pulling out of Bagram last week, 45 miles from Kabul, and you already have Taliban forces coming in. Really what's happening is you have a lot of refugees fleeing the country, and this is going to be a geopolitical concern for the United States, but also Russia. President Vladimir Putin has been making the calls to Tajikistan, Uzbekistan, all these countries that surround Afghanistan, and there's also as well Syria. The United States and Russia are also working on these aid corridors with Syria. So potentially you could see a lot of geopolitical stories at play this week with the United States.
What's the balance in the White House right now, Anne-Marie, with regards to their focus on domestic issues and their focus on foreign policy issues?
I think it's been very clear that this administration really came in focusing on domestic issues. There are obviously people within the White House that their core focus is on foreign policy, but the overall goal of this administration is domestic issues, and that is because they inherited a weakening economy and the pandemic. Potentially now, as they do see these vaccination rates go up, there could be a bit of a shift towards geopolitics, but this is also an administration that wants to wean an economy off of oil and gas. So while they do want to settle down the OPEC members, and of course they are trying to relinquish their presence in Afghanistan, this is definitely an administration that is focused on domestic policy.
Anne-Marie Horton, thank you so much. Greatly, greatly appreciate it this morning. She was dazzling me there with her Afghan analysis. Excuse me. Their futures -2, Dow futures -8, and the VIX 15.84 as well. I find it interesting, Matthew Miller, that the Afghanistan exercise of Russia over to America, I'm going to bracket it at 30 years. Maybe it's a little less. Borders on a European war of another time and place. How is Afghanistan treated in Germany?
Yeah, well, I mean, the Germans have already pulled out their troops, but they're following very closely what the U.S. is doing here, and I would say that there is concern that once they pull out, there's a vacuum that's created, and only bad power can occupy that vacuum. So Germans are concerned, but of course, they're not in a position to do anything about it militarily. They're not active in that way.
I sat in our news bureau in London ages ago, folks, and watched how the British treat this. And it was following a casket all the way from Kabul back to London across the entire part of the day. Really, really extraordinary. We're going to continue with equities, bonds, currencies, commodities. Romaine Bostic and I are watching the equity markets 1 week before that huge earnings season. We'll take advantage of Romaine's attendance this week to really dive into the equity markets. What you need to know, the 10-year real yield, ever more negative. Stay with us. This is Bloomberg. Good morning. Good morning, everyone. Bloomberg Surveillance. Jonathan Ferro and Lisa Abramowicz both off. Well-deserved a time off here. Romaine Bostic with me and Matt Miller this morning as well. Romaine, futures, they ebb away, but after that big jobs report, not much of an ebb.
Yeah, but keep in mind, we've seen this a lot here in the pre-market, where you see things sort of a little bit tepid here, and then once you get to the cash market, the market starts to perk up here. I mean, you're talking about 7 straight days of gains right now for the S&P 500 in the cash market here, and a lot of that, Tom, I think gets back to what we heard just a little bit earlier from Ben Layler here, the idea that people are sort of reassessing their expectations for economic growth and earnings growth, reassessing them higher here, and that's putting a bid back into this market, a modest bid, but it continues to do this crab walk to record after record after record.
No, it's been interesting to see, and it is the optimism of America, as Professor Krugman mentions in an op-ed today, the idea of mourning in President Biden's America. We continue this discussion, not less on the markets, but more on international relations with Richard Haass. A year ago, his effort was my book of the summer, and that would be The World, A Brief Introduction. I really can't say enough about it being the required brief read to get you up to speed on the dynamics of the world economy. Ambassador Haass, thank you so much for joining us this morning. What do you worry about after a 4th of July? What's the thing within the entire sphere of your work with the Council on Foreign Relations? Where's your reading? Where's your research where you're trying to figure something out?
Tom, I could give you two answers. I could give you a very long list of international things that worries me. You mentioned Afghanistan. There's always China. People aren't talking about North Korea, but it hasn't gone away. There's Iran. But. The thing that worries me most is still us. What still worries me most is how divided this country is, how our democracy is under assault from within. And that's what worries me. If we can't come together as a country, there's no way we will be able to act effectively on the world stage.
You drove forward this discussion, it seems a lifetime ago, a world in disarray. So let's look at, after this 4th of July, an America in disarray. What do our institutions need to do to get us back on course in a better direction?
Well, our institutions, some of them have performed pretty well when you think about it. The courts have performed admirably. The media, for the most part, has fulfilled its role. The real problem, I think, is two things. One is Washington. We're still unable, for the most part, to come together to deal with some of the challenges facing this country, even beyond infrastructure, things like immigration reform, dealing with budget issues, and so forth. And then at the state level, the disparity in state levels of vaccination is a real statement, shall we say, about the federal system and the unevenness of how the United States is dealing with what is still the biggest challenge the country faces.
Why can't we get more of a bipartisan push behind infrastructure? I mean, I know we have the $700 billion deal right now, but in an age of, trillion-dollar stimulus and a country full of patriotic politicians, why don't we get a bipartisan deal to give us an edge on our competition?
Well, we may have a bipartisan deal. I think central to it will be a narrow definition of what constitutes infrastructure. If there's no bipartisan support for, shall we call it, a broad definition of quote unquote human infrastructure, and then I think there's still questions of whatever scale legislation is passed is how you pay for it, and you're obviously going to have problems when it comes to specific tax increases.
Is there ever a possibility that we get someone or a group, a big enough group that wants to clean out the loopholes, clean out the deductions, and bring revenue higher with the tax base where it is?
Ever's a long time, but I don't see it. One of the rules of democracy, it's not what majorities care about. What drives a democracy are intense minorities. That's the reason, for example, you might have 90% of the country favoring background checks, but you can't get certain things on gun control because of the intensity of minority. And by and large, you have very intense minorities in favor of quote unquote loopholes. And I think it makes it very hard, even though a majority of the country might be open to the sort of thing you're talking about.
Yeah, Dr. Haas, I mean, we talk about the disarray here in the U.S., and of course, a lot of foreign nations look at that disarray and they see opportunity. We're continue to be barraged by cyber attacks, presumably either at the direction or at least with the sort of implicit, backing of foreign governments here. You have the resurgence here of China across the world in areas where the U.S. used to be the dominant force here. How much does the White House and the policymakers here in the U.S. need to be concerned here about the influence or the lack of influence we may now have in some parts of the world?
I think you got two areas. One is with actual or would-be foes. The other is with allies. I think they've been more focused on trying to rebuild U.S. relations with our friends to reduce some of the uncertainty, some of the concerns there. But with the two countries you mentioned, the administration has been focused much more on China than on any other foreign policy issue. They haven't quite put together a comprehensive or coherent policy. With Russia, we're going to have a test. You had the meeting in Geneva. The president put down a marker about cyber. Russia continues to allow cyber operations against us that emanate from its territory. So the real question is, are we going to act on the norm that, like in the case of terrorism, governments are held accountable for terrorist actions that come from their territory? Are we going to act on the norm that governments are also going to be held accountable from cyber actions that emanate from their territory? We're going to find out.
Do you have confidence that there'll be a diplomatic solution to this?
No. I may be a diplomat by training. I don't have a lot. Look, you're not going to get some Geneva Convention on how to regulate cyberspace. The real question is whether you can influence, say, the cost-benefit assessment of a Vladimir Putin. And that's the real issue.
Ambassador Haas, a totally unfair question, but let's go there. It's Unfair Tuesday. Is there a Biden doctrine? His Secretary of State Blinken is the president. Have they delineated a distinction here that you see that you can call a Biden doctrine?
No, I don't see a doctrine because a doctrine has a degree of commonality and universality to it, Tom. What I'm seeing are certain impulses. A real one I mentioned already, which is an emphasis on rebuilding relations with allies. Two, a surprising emphasis on the promotion of democracy, the idea of dividing the world between democracies and authoritarian systems. Obviously, a fairly robust rhetorical and other set of responses towards China. There's been a re-entry into multilateral organizations. But again, these are all tendencies. I don't see anything that both explains what's going on and predicts what will go on.
What is so helpful here to have the gentleman of the Council on Foreign Relations with us is there can always be a headline that comes out that deserves perspective from Richard Haas. Here's a headline, Ambassador. China-U.S. officials have phone call on Korean Peninsula issue. You led with this in our conversation this morning. Have we been tested yet on Biden and North Korea, or does that await?
It awaits. It hasn't happened, and there's been no what you call station identification from North Korea, which historically we've gotten from time to time. There's been some intriguing reports about real problems with COVID inside North Korea, so one has the sense from afar that they've got their hands full. But in the meantime, North Korea's nuclear capabilities and missile capabilities have steadily built up over the last decades. And I think the real question is, does the Biden administration try to start some type of what you might call an arms control conversation, saying, look, we want to get rid of all your nuclear weapons and missiles. We know that's not going to happen anytime soon. Let's see if we can't slice this in a way or tranche this in a way where you get we get a bit of progress on what we want, and in exchange, you get a bit of progress on what you want, which is sanctions relief. We haven't seen that yet, Tom, but I think that's possible.
Ambassador, I want to ask about Berlin. I'm here, and of course, the elections are coming up in September. Do any of the possible outcomes change the relationship between the West and Vladimir Putin? Because until now, we've been really unable to strike back at Russia, or at least if we do strike back, we're still sending billions of euros through Nord Stream 2 pretty soon, straight to Moscow and straight to Putin's coffers.
I think Nord Stream has gone so far that it's hard for me to imagine anyone walking it completely back. No, I think the United States is going to have differences with pretty much whatever leadership emerges ultimately in Germany over both China and Russia. And in both cases, the German desire to have an economically led diplomacy or foreign policy will probably outpace us. And I think that's going to be an inevitable area of some friction. Ironically enough, it might be less between the U.S. and the Greens, because there the Biden administration might find more of an overlap stemming from both environmental issues and human rights issues.
Ambassador Haas, thank you so much. Richard Haas, of course, of the Council on Foreign Relations, their president. I can't say enough about the required read, The World, a brief introduction for all of us. Really just a lovely primer, if you will, on the state of our international relations. Ben Miller in Berlin, Romaine Bostic in New York. And Romaine, Shelley Banjos really talked this up. She and Greg Corday report in this hour on a mayor's race too close to call. And, of course, this is this complexity. Romaine, you're the only one in the building who's figured out ranked voting.
No, I haven't figured it out myself here. I think both me and my wife are still scratching our heads here. Interesting experiment here in New York. I don't know who's coming out on top, but basically you have Eric Adams, Catherine Garcia. Basically now, I guess the top two choices. I'm not sure how that works. I think one of them has to get 50% at some point. Well, I don't know how this works, Tom. I think they should just come on here and debate it out.
They could do that, and we had some good interviews with all of these qualified
I'll tell you what. It's a point system. The same way in Formula One or MotoGP, you don't have to win first places all year long. As long as you're on the podium more often and fewer other people are winning first places, you can still be world champion.
That clears it up, Matt.
Let's summarize this into this morning, and we'll have full coverage of this through the day. And it's a race that's really garnered national attention, and that is that the liberal, the progressive Wiley, most of her ranked votes went to Ms. Garcia, who took Manhattan, like Joe Cocker did with the Leonard Cohen song a few years ago. But I would suggest Adams and Garcia is the focus here of 125,000 absentee ballots. We'll have more information on this today, maybe a decision by July 12th. Stay with us. From New York, from Berlin, this is Bloomberg. Good morning.
With the First Word News, I'm Rishika Gupta. The price of West Texas Intermediate oil hasn't been this high since 2014. Crude surged today after a fight between Saudi Arabia and the United Arab Emirates blocked a supply increase. The dispute also plunged the OPEC Plus coalition into a crisis, and it left the global oil market without the extra supplies for next month it had been counting on. In Tokyo, the Summer Olympics reportedly will begin before a mostly empty stadium, according to the Asahi newspaper. The government is arranging for the opening ceremony July 23rd to be held with only a reduced number of VIPs in attendance. Originally, about 10,000 people were expected to be allowed. Blackstone president and COO John Gray says it's still a pretty good time for real estate. Gray speaks on a wide range of topics on the first episode of Bloomberg Wealth with David Rubenstein, which debuts tonight on Bloomberg TV.
I think it's still a pretty good time for real estate, and I'd say it for a couple of reasons. One is the warning signs for real estate are
Bloomberg Wealth with David Rubenstein debuts tonight at 9 p.m. in New York and tomorrow at 7 p.m. in Hong Kong and London on Bloomberg Wealth. Carlyle Group co-founder David Rubenstein provides unparalleled access to the world's most successful investors. The European Central Bank is entering the final stretch of its biggest strategy review in almost 2 decades. Officials are trying to hammer out key differences over monetary policy. A major issue is agreeing to a new formulation of the ECB's inflation target. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Vaccines are not 100%. There's a small chance, and in an enclosed environment with somebody, who is infectious, that's going to maximize the chance you'll get sick. So I do think we can predict that in certain areas, it's going to be a reasonable thing to do for people to wear masks indoors.
Joshua Sharfstein with Johns Hopkins, a Bloomberg School of Public Health. We should mention that Mr. Bloomberg, of course, owner of this radio and television property, has been philanthropic with his alma mater, the Johns Hopkins University. Right now, Amish Adalja joins us with their Center for Health Security at Johns Hopkins. Amish, you and I are on the same tone here. You as the pro and me as the clueless, and that is the India Delta variant seems to not be systemic, but seems to be very narrow. And the narrowest can be in America, the Southwest, or maybe a Los Angeles, it's worse. Or maybe it can be what I see in the statistics, the quote, rest of Asia really struggling as well. Tell us about the specificity of the map and a variant.
So you have to remember that this variant is more contagious, and our vaccines are highly effective against the variant, and prior immunity is going to have some impact on the variant. So what you're going to see when you look at a map is that proportions of the population of the world that have low vaccination rates, that's where Delta is going to flare. And the flares are going to be very different, because in places where even if the high-risk people are vaccinated, you will see cases, but they won't necessarily run into hospitalizations. And that's what you're seeing in the United Kingdom. But in places where you have no vaccines and little prior immunity and the Delta variant, that's a recipe for hospitals getting into problems again. And we're not going to see that much in the United States, but there are places like Springfield, Missouri, where they've gotten into trouble because there's enough high-risk people that aren't vaccinated. But I do think when you look at the world and the lagging rollout and the lack of vaccination in many parts of the globe, the Delta variant is going to have an easy time running through those areas. And the goal in those places is to get their high-risk population vaccinated as quickly as possible.
Is there a history here? And I think of rubella, the great measles debate, which is ancient history for young people like Romaine Bostick and Matt Miller. But Dr. Adalja, do we have a risk here of percent vaccinated giving us two Americas?
I definitely think that's already happening. But in many times when we talk about percent vaccination or vaccination differences, it's because of lack of access to vaccine. But that's not the case in the United States. Everybody can get a vaccine who really wants to. It's very convenient to do it. But I do think we're seeing this separation, and there are certain places, Arkansas, Missouri, Nevada, Mississippi, Alabama, where vaccination rates are really, really suboptimal. And COVID-19 is going to still continue to be a disruptive force in those states, while it's not going to be one in Pennsylvania or New York or New Jersey, because of the way the vaccination rollout has went and the acceptance of the vaccine by the population. So this is the next challenge, is trying to bring those areas up. So the Delta variant is even less of a problem there than it is going to be for the rest of the country.
Yeah, some of these regional differences are absolutely stunning. I mean, the numbers out of Springfield with regards to the hospitalizations definitely cause for concern. I am curious about some of the cross-border issues, Dr. Adalja. There was a lot of talk over the last couple of weeks about why the U.S.-Canadian border continues to be shut down for any sort of recreational crossings here. A lot of folks still sort of scratching their head as to when you have states that sort of abut that border that are basically around 60–70% vaccination rates, why they cannot travel freely.
Yeah, this is something that doesn't really make sense to me. I think that we have now, in this era of the pandemic, with high levels of vaccination in individuals, ways to test people rapidly. There's no real reason for that border to be closed. There's many borders that are open. Americans can go to many other countries, but they can't go to Canada. And I think that makes zero sense, because in some cities, there is really a border that's just a different street that you're on, and you're in Canada. So I think this is something where we need some rationality in the policy. And I think it's something that can be opened safely without harm to either country. And I think that it would be a good sign to show that highly vaccinated countries can go back to normal, and Canada is now more of a highly vaccinated country, and we have testing and protocols to make that safe, just like when an American goes to Mexico or an American goes to any other country that's open.
I can't imagine why anyone who's fully vaccinated wouldn't be able to fly into the U.S. My wife is going to have a problem with it next week because she's Spanish. Fortunately, she's carrying a fully American infant with her. But my concern, and maybe it's because I read too much fiction, Amish, is that we have the under-vaccinated countries creating new variants every day. The Delta variant certainly isn't the end of this. As Niall Ferguson said, the problem could be the Omega variant. Is that how these things typically go? Do they get worse, or does the case fatality ratio get better as they go on?
It's a complicated type of calculation, because it's not always one way or not always linear. But yes, there's going to be more variants, and we talk about Delta, but there's a Lambda variant in South America. There are other variants that are going to continue to arise because viruses just evolve. But what we know so far is that our vaccines are highly effective against these variants, especially when it comes to what matters, preventing serious disease, hospitalization, and death. COVID-19 is not going to go magically back into bats. We're going to be dealing with it, and I think we have to come up with a sustainable approach by vaccinating high-risk individuals, protecting hospital capacity, but then I think we've got to sort of move on with our life using testing, tracing, isolating, trying to keep it away from vulnerable populations, and I think that's what we're going to be facing. Variants are going to come and go. Some of them might be more contagious, some of them might have more severity, but it's not necessarily the case that there's going to be some kind of Andromeda variant that arises that's able to evade everything that a vaccine can do. It's very hard for a virus to be able to mutate away from everything that a vaccine protects you against, especially those three things: serious disease, hospitalization, and death. So I think it's a theoretical concern, but I don't think it's a real one. and I think we've got great vaccines.
This is great. I love it. Matt Miller goes all Hollywood, and Dr. Adele just straightens him out. Thank you so much, Amos Adalja with Johns Hopkins Center for Health Security as well. We need to go to the markets right now. We've noted the real yield really with a setback, negative 0.89, has become a greater negative statistic, negative 0.93 as well. What's the jobs report mean, Romaine Bostic, for your world of the close in the equity market? What's
it means stability in that growth trajectory, Tom. You talk about these markets which continue to sort of hit these record highs. They're incremental. They're very sort of modest record highs,
but they are
persistent. Exactly, Tom. And they are persistent. And this is now a repricing. We are basically at a level right now on the S&P that a lot of people thought we wouldn't really get to towards the end of the year. And now a lot of folks starting to nudge up their targets to 4,500, 4,600. You're seeing that sort of feed in to some of the other talk about cyclicals. Remember, the bloom had come off that rose a couple of months ago, and now people are piling back into that. It'll be interesting to see whether the Fed complicates anything, but at least for right now, it doesn't appear that the market is betting that's going to be the case.
Matt Miller, European equities are less engaged than American equities. It's less of a roulette parlor, I'd say, over there. Are people engaged in the surge in European equities?
They're trying, but there just isn't. If you're talking about retail investors now, there just really isn't the technology to do that. There's not a functioning Robinhood at least on the continent, at least in Germany, to make it happen. Well, some think that's good, right?
Some would say that is good as well. We will see. We are going to move forward. We have a real treat for you. Daniel Alpert will join us from Westwood Capital. His book, The Age of Oversupply, definitive on the crisis.
Businesses have been ready to reopen faster than workers have been ready to come back.
We see a very high number of people who are quitting their jobs. We only see that when people feel very confident about the job market.
I do think we're far enough along that a lot of that scarring should begin to dissipate.
I would argue every data point now is going to be a market event because they've put the market on notice.
We've missed on inflation for so long that the Fed is really focused on achieving its inflation target.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, a simulcast on radio, on television. We welcome all of you. It's a 4-day work week in America with Euro 2020. We'll get to that in a moment. It's like a 2-day work week for Matt Miller in Berlin. He joins us this morning, slacking off on a 6-hour day. Romaine Bostic.
I was here yesterday.
From the shed. You were, yeah, I know, Matt, but it's not the 4th of July in Berlin. Romaine, the shed. What is it like to have an orchestra in the most historic, building, outdoor building in American classical music?
I was out at Tanglewood this weekend for the Boston Pops July 4th Spectacular. A fantastic facility, and we should point out this was the first in-person concert that they've had there since the pandemic. So just to actually see everyone out there on that lawn there and milling around, still limited capacity, but still you had a decent crowd there. Just absolutely fantastic. Great way to celebrate.
It was not in the half shell, Tom.
It was not in the half shell. It was out in Western Massachusetts,
Western
Matt.
The beautiful Berkshire Hills.
This is more towards where there's more Yankee fans and Red Sox fans. Romaine, nobody cares. What they care about is, were there real cannons at the end of...
They had the real cannons out. They were actually even louder there because of the hills sort of trapped that sound.
Very
and
cool.
But that's all everybody wanted to hear. It was fantastic.
Well, there we are to get started here.
105mm howitzers.
Yes. Like
very
literally 10 feet from my ear. It was wonderful.
These two gentlemen guys have done it. They've been out to the... I've never gone because they just don't think I,
Oh, Tom, I'm sure they would have you.
Yeah, well. Yeah. No, I don't think so, actually. Futures are -2. NASDAQ goes the other way, as Romaine predicted 60 minutes ago. A little lift to the market. And Romaine, this is the grinding market. Let's do the data check right now to get to Mr. Elton.
Yeah, you got the 43.40 there on the S&P futures here. You look at euro dollar, and of course, your 10-year yield remains unchanged. But the real story that a lot of people are going to be talking about today is this bump up that we've seen in crude oil. Right now, you're looking at 76.46 here on the New York prices here, WTI. Of course, Brent crude doing its thing as well.
Yeah, there we go. And with the data, I'd say the yield market really interesting. I do want to note, we didn't talk about it in the last hour, but the dynamics of this economy, the efforts of the Fed, and the overnight repo market. This is real inside baseball. Expanded out almost to $1 trillion in the last 3 days. It's come in a little bit. It'll be stunning for global Wall Street folks to see where overnight repo goes over the next 2 days and really over the next 2 weeks as well. Matt Miller, I just got to touch upon it as well. It is a celebration of English football. For Euro 2020, Matt, I mean, they couldn't have hoped for 2 games like we're going to get today and tomorrow in your Europe.
Well, especially today, right? Italy, Spain, arguably the 2 best teams in the entire tournament will square off tonight. And that could provide us, depending what happens tomorrow, with an absolutely fantastic match for Ferro on Sunday. I'm actually flying home on Saturday to New York and hoping to watch the match with Ferro on Sunday. If it's Italy-England, I don't know who he roots for.
Well,
does that just tear him
apart? I think
apart?
it's made clear. No, he votes for Italy, I think, on that as well. I would say to our American audience like me that can't find it on a network, this is a huge deal, and we'll, of course, follow it with good spirit with John Ferro through the week as well. Right now, and this is a joy, I really wanted to come out of the 4th of July with a vision towards where are we. He gave us a vision out of the financial crisis. Daniel Alpert's The Age of Oversupply was hugely acclaimed, deservedly acclaimed as well. And we speak to him now in this pandemic of undersupply. Dan Alpert, are you concerned that we are undersupplied right now?
Well, I mean, clearly we have some bottlenecks and these are sorting themselves out. But let's face it, we've now been through several months of news and headlines that are all focused on these enormous surges in prices in areas that are now well known. What's going to happen over the next several months is we're going to see the resolution of those problems. And suddenly we're going to be hit with headlines that say just the opposite, right? Was the inflation scare just a bubble? Was it a passing fad? Are we back to same old, same old? And the same issues are going to crop up again, which is how do you transfer or transmit economic growth to inflation over the longer term? Coming up into the fall, we're going to experience something that I don't think the markets are quite prepared for, and that is a potential contraction in personal incomes, the result of obviously the curtailment of all of the government support that ends on September 6th. Now, we still have 14 million people receiving some form or another of advances from the government each week. We know that those people that number is shrinking every week. And by September 6th, it's going to fall to, possibly between 2 and 3, which is a normal level, 2 and 3 million. At that point, the question is, will the jobs those people have succeeded to the extent that they have found jobs, going to replace the same income that they were making before?
So are we going to see, Dan, when these employment benefits run out, job openings fill up quickly? Is the JOLTS report going to look a heck of a lot different in October than it does tomorrow?
As I wrote in the Times a few weeks back, there's no question that this period has enabled people to stay out of the jobs market and continue on benefits. I don't think that's necessarily a bad thing because I think the proof in the pudding over the longer term is going to be whether or not those jobs really exist at wages that fall above the reservation wages of a lot of people, where they're actually willing to get up and go to work. You're not going to get people, especially after this pandemic, all that eager to make $10, $11 an hour working in a job that only offers 25, 26 hours of work a week. It's going to be very hard to pry them back into the labor force. At some point, of course, people are going to work just to live. But that's not going to be a pretty picture either. So the real question is, what is the fall going to look like? And we're going to enjoy the summer too much. All of us, I was on the beach yesterday. Everybody's enjoying themselves so much. None of this is really going to come into focus.
We gotta stop the show here right now. Dan Alpert, you were on the beach yesterday.
Can't you see my?
What do you get? You got to.
I know where he was.
In the Hamptons, or are you surfing in the Hamptons? What are you doing?
No, I was at my my club of of 27 years, a club that dates back to 1886.
Do they just Velcro a gin and tonic into your hand? Is that what they do?
I think we drink a South Side there.
A South Side.
Yeah,
Very
yeah.
good. Okay, Romaine, continue, please. We've cleared up the young.
I like a rum
that,
South Side.
That concludes the cocktail portion of this interview. Dan,
that includes the cocktail.
I do want to get back here to the economic issues here. And the other component of this that a lot of people are looking at is the additional fiscal spending, whatever you want to call it, stimulus, whatnot. Mm-hmm. There is a general sentiment out there that the street, that investors, they're sort of welcoming of additional spending, at least to a point here, out of the U.S. government, and the assumption here that this will drive another leg of economic growth.
Unquestionably. I mean, the bond market is squealing for it. If you look at long-term yields, which of course are less reactive to what the Federal Reserve is doing, you know, the amount of float out there is still significant in the long term, and people are seeking risk-free yields. There's a surfeit of available risk-free bonds globally, and so when you have, I should say, shortage, what you have is a situation where people who are looking to park their money, and it is really parking. People are not yield sensitive at this point. Are looking for an expansion in that inventory of risk-free government bonds. And just look at the reaction. You had a fairly favorable jobs report. Normally, you would think that the fairly favorable jobs report would create a sell-off in bonds, and of course it didn't. You look at where bonds are opening this morning.
We got to leave it there. Dan Alpert, thank you so much for setting us up into July with Westwood Capital. And, of course, I can't say enough, still fresh, the age of oversupply of Mr. Alpert. Moving on. Now, we've got to get back to the markets, and I do need to get to China. But, Romaine, I'm sorry. 5 mint leaves, lemon juice, gin, and syrup.
That's what's that? That's the South Side. That sounds pretty tasty.
It's the South Side. I think we may have to construct that.
Yeah.
Oh, Mr. Miller speaks from experience.
The South Side is a delicious cocktail. I believe it was invented at a hunting and fishing club out on the end of Long Island.
Yeah, they had a gun and a mallard. The mallard duck was flying over, and they couldn't get it. They couldn't catch it because.
Can we get that on set for the next hour?
South Side.
Yeah.
Well, no, actually, no. The Tang Mimosa this morning is really quite good.
All right.
You know, so I don't, need to have a South Side. With serious news, Romaine, out of China, the headlines drift out right now.
Yeah, I mean, this is interesting. I mean, we kind of saw this coming. China basically pledging greater data scrutiny for publicly listed companies. That's the headline here. Basically, guidelines being put out right now by the State Council there over in China. They don't specify any specific companies, but obviously all the talk right now is on Didi. Those ADRs here in the U.S., that's your biggest mover pre-market, down about 20% here. A lot of concern here about what Didi knew heading into that IPO here in the U.S. and what they may or may not have shared with investors.
For those of you on Global Wall Street, Philippe Pacheco out with a very nice primer. I'll try to get it out on Twitter here in a bit. I'm going to butcher, help me, Romaine. Zihu, Tuya, Kanzun, Full Truck Alliance, RLX Technology.
Yeah, you're doing good.
Full Truck.
You're doing about as good as I would have done,
I nailed that. Absolutely nailed that. Let's do a data check here. Futures -3 down. A little green on the screen, Romaine, when the NASDAQ 100 goes green.
Yeah, I mean, you're seeing a little bit of a bid come in here to those tech stocks, those bigger cap tech stocks. That does appear to be the safety trade. It does appear to be what a lot of people are looking at right now, Tom and Matt, as the next leg of growth here. The growth trade is going to be baked into that.
John from AC Milan emails in and says, look at the 10-year real yield. We'll do that. The real yield, we're looking for that on Friday with John Ferro. -0.93 on the real yield. And as we heard from Mr. Alpert, it's been a real shock to see the inflation drift away. I know Jeff Rosenberg of BlackRock saying the same thing on Friday during the jobs summary that we did. This is must listen, must watch on the equity market and your courage to hold shares of Apple and Amazon. Christopher Grisanti of MAI. Earnings season next week. Stay with us on radio and television. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Oil jumped to the highest price in more than 6 years today. That's after a bitter fight between Saudi Arabia and the United Arab Emirates blocked a supply increase and plunged the OPEC Plus coalition into crisis. The coming days will determine whether the battle will escalate into something as destructive as last year's price war. In the UK, business lobbies cautiously welcome Prime Minister Boris Johnson's plan to ease coronavirus restrictions on July the 19th. Still, there's a heavy dose of skepticism. It's good news for pubs and nightclubs, but there's also the issue of liability surrounding infections in the workplace. President Biden and Russia's Vladimir Putin face an early post-summit test in Syria. An agreement over international aid corridors into the country is set to expire this week. At last month's summit in Geneva, President Biden asked Putin to keep aid flowing into Syria. That will require the two nations and other members of the United Nations Security Council to reach an agreement. The cost of renting a home is soaring in cities across the U.S., according to the real estate firm Apartment List. The median national rent climbed 9.2% the first half of 2021. That's squeezing the finances of low-income households, and it's posing a threat to the idea that pandemic inflation will fade away soon. And shares of ride-hailing giant Didi plunging trading in the U.S. Chinese regulators have ordered that the company's platform be removed from app stores. Beijing is tightening its grip on sensitive online data and cited security risks as the reason. Today, the government pledged it will improve regulations and laws regarding data security. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The bar to hike for the Fed is much higher. They want an inclusive recovery. They want inflation to persistently, be or at sustained basis be at 2% overshoot. So I think, but the tapering bar is not that high.
Priya Misra, hugely valuable on full faith and credit. It has confounded the experts, the zeitgeist, if you will, through the first half of this year. Inflation, we're going to get it. Yields are going to go to 5%. Well, they didn't. 1.42%, maybe 1.43% in the 10-year yield. Jonathan Ferro and Lisa Abramowicz off today. Thrilled that Romain Bostic and Matt Miller could darken the door. Mr. Miller in Berlin, getting ready for Spain, Italy, rooting for Spain, or he can't go home tonight. Romain Bostic and Tom Keene. Well, what do you think, Romain? Will we miss the match?
No, Tom. I mean, look, this will overlap, of course, as you know, with Bloomberg Markets to Close. But don't worry,
good, very nice.
Full wall-to-wall coverage may or may not. I don't know. That may violate
you
some
got to do the trick,
agreement
Romain, where you got the
UEFA or
TV.
something,
You got the TV feed below.
Live updates.
Talking about Didi in China, but you're also watching.
the South Side right underneath.
I would point out, folks, for the uninitiated like myself, I believe Spain back-to-back scored 5 goals in 2 consecutive games, which is sort of, Matt, that's sort of cool, right?
Not counting the penalties, right?
Yeah. I don't know. I don't believe in penalties. I tell Ferro they should kick the ball from farther out and make the penalties more exciting. Washington, always exciting. Jack Fitzpatrick joins us this morning. Jack, I want to talk about Jacksonian American, and that is Andrew Jackson. President Trump had a big portrait of Andrew Jackson in the Oval Office. We are migrating away from a Jacksonian American, but a huge part of the Republican Party, they do not. Tell us about that tension into the primaries and the election of March of 2022. What is the strength right now of Mr. Trump's Jacksonian America?
Trump really is the force behind Republican primaries right now. If you look just around the country and in the congressional primaries, whether you have gotten an endorsement from Trump or whether you have cast yourself as a Trump acolyte is a key question around the country, and they've had success. The question is, and especially if you're trying to get at what his legacy is, how he shapes the country in the long term, does the Republican Party stick with him in 2024? If he's going to run, or even just how he factors into the other people running in 2024, right, and whether they cast themselves as Trump acolytes. But that's essentially the identity of the party right now.
Jack, an unfair question, and you're a real journalist, so I really have a respect. You don't want to give your opinion on this. But is the general feeling or your reporting showing that President Trump is casting around and trying to find a path, or is he just strategically biding his time to get out to the active primary season?
It seems that he, at least right now, is trying to maximize his influence. But there are a lot of questions as to what that leads him to and how he does it. There at times appear to be sort of an aspect of sort of staggering through the blindness when you see him aligning himself with a new social media company and trying to get interest in that, when he struggled with a blog that his website is now down. He's off of social media and putting out statements. Clearly he is interested in maximizing the amount of attention he gets and influence he has over just political communications, but there are some real struggles there, and I don't think you can necessarily argue there's a very clear strategy as to how or to what end. Yeah, if there is, we haven't seen it. There's certainly sort of some faithfuls out there who probably would back him no matter what the strategy. We've also started to hear reports from other news sources that the Biden administration has been trying to make a little bit more of an effort to reach out to some of those Trump voters, or at least more of the conservative wing of our political system here. The idea here that they can maybe appeal to them with some of the economic policies. I'm wondering whether there is actually a bridge that could be built to that sort of wing of our political system here, or whether the gulf is just too wide. Well, yeah, when you look at 2016 and look at the power of Donald Trump as a candidate, he clearly did energize at least some voters who supported him, who were not your traditional Republicans and were not particularly interested in politics for a pretty long time. The question is exactly what gets them on board. There is a real power to pushing policies such as giving out $1,400 checks during a recession. Is it just the economics that can win those people over, or do they want to see something much more like the border wall that Trump pushed so hard? There could be overlap with Biden, but clearly that's not going to just win over the Trump voters. So, you know, there could be some populism appeal to some of those voters, but there's a limit on how much he can do.
Well, the Biden camp has got the populist appeal with it as well, right? I mean, casting millionaires and billionaires as the enemies of the state almost with a tax policy. How much of that is gonna really come to fruition in terms of the Biden tax wish list?
Well, yeah, that's what I'm getting at, is that the so-called sort of centrist or moderate Democrats, which you would have called Biden previously, are now adopting much more progressive policies and being pushed that way in the name of finding an appeal to the voters who you would probably call populists and may have been won over by Trump. On the tax question, though, that's the hardest part of all of what we're seeing from Biden. He can get agreements even on a bipartisan level on what to spend money on, but the tax measures are particularly difficult. We are going to see a significant push for pay-fors for this infrastructure proposal. They're following through on the tax proposals that Biden has put out, but there's such a fine line and narrow majorities in the House and Senate for Democrats that if anything falls off the table, it may be those tax policies.
Jen Fitzpatrick, thank you so much for a Tuesday report with Bloomberg Government this morning in Washington. I look, gentlemen, at where we are in the markets, and I think we've just got to go back to yield. It's a deeper market. It's a bigger market. Many would say yield out front. Romaine Bostick, what does yield say about the equity market? I mean, the sustained low yield gives you ratios that you can live with.
Yeah, and I mean, that's really been a big part of the story for the equity markets over the last 3 weeks or so. This drop that we saw, at least on the longer end of the yield curve, definitely providing a little bit of a boost here. But keep in mind, a lot of folks still keep an eye, of course, on the shorter end of the yield curve, which, of course, has been going in the opposite direction here. And the general idea that at some point this gets reconciled, how it gets reconciled and what direction it pushes the equity market still remains to be seen.
And the ratios there, folks, I mean, we forget about it. I mean, just to bring up Apple is, a small cap that we like to look at. I mean, Romaine, PE, 32.
PE, no, Tom. No. No, don't do that. So the fundamentals, we talk about the PEs, we talk about these ratios here. Yeah, a lot of people do have their eyes on them, Tom, but they're still looking at the growth side, the revenue side, the margin side, the PE itself. Push it to the side. Push it to the side.
He's drunk the, how did he get on? He's drunk the Kool-Aid of the close. I mean, he's not
like
dealing in CFA rationality. This is Bloomberg. Bloomberg Surveillance, good morning. Good morning on radio across this nation and television as well. Looking worldwide, Matt Miller in Europe, waiting for Italy and Spain as well. Romain Bostic with us. We'll get to the stocks here in a moment. Looking at where we are this morning into a 4-day work week, as Romain mentioned, resilient equities in the bond market confounding the higher yield. Crew, we haven't mentioned it, dollar stronger. But there's an oddity to it with euro 118.45, yen 110.66. I'm going to call that in sum a churning American dollar this morning. Let us churn over to the equity markets. Romain Bostic, do you start with Didi or do you got something smarter to talk about?
No, you got to start with Didi. Of course, that's the story that's really rocking the market here. Yeah. A successful IPO last week, $4 billion IPO, being cut down to size. Yeah, they're being cut down to size now by Chinese regulators concerned apparently about data privacy issues. But there's a great story here on the Bloomberg terminal about the idea here that apparently Chinese regulators approached Didi as about 3 months ago about delaying this IPO because of some of those data privacy concerns. They went forward with their IPO, not really clear what the next step is here, but a lot of reverberations, not only for Didi, but really across the Chinese tech space. Even here in the U.S., Uber shares down about 1% here pre-market. Didi right now down about 18%, their ADRs. Baidu, those ADRs of that company, of course, the big internet giant, down about 3% here. So a lot of stocks to keep an eye on here that could see some fallout from that. Now, of course, outside of Didi, the other big story of the day, of course, is what's going on in the oil market. You're looking at above $77 right now on Brent crude. That's providing a nice little bid here to a lot of the energy stocks, including ExxonMobil, Conoco, as well as EOG. A lot of the U.S. shale companies doing quite well here. The idea that as OPEC sort of puts sort of a floor underneath prices, that's going to be good not only for OPEC, but of course for everyone else. American Express outside that space getting an upgrade today over at Goldman Sachs. Those shares higher here by about 2.5%. Yeah. And you want to know why, Tom? PE, believe it or not. They say PE is too low for this company. And look at it, Virgin Galactic here. Space,
works the other way.
I'm told, Matt, that they're going to blast Richard Branson off into space in about 5 days' time here. Those shares, they had been down about 25% over the last 4 days.
I mean, let's stop the show here. Romain, I'm so glad you brought this up. I mean, the idea of, let's get the calendar right. Bezos is going up July 20.
Yes.
He's going to do what I believe is an Alan Shepard, go up, enjoy space, come down.
Yes.
And then
he is going to come back.
Is it rude of me to say that Mr. Branson is front-running Mr. Bezos?
Yeah, well, Mr. Branson's scheduled flight was after Bezos's, and now it is on July 11th, which I believe is this coming Sunday here. So, yes, there does appear to be a little bit of one-upmanship here amongst the two of the richest people, I should say, out there.
Please, man.
Neither one of them is going into orbit.
No.
Nor are they getting out.
But they are not getting out.
What's
I
the big
believe
deal?
they will stay strapped in, Matt.
Well, the symbolism of it. I mean,
but it's technically space, Matt. Technically.
I mean, back to Mercury here.
And once you get above the atmosphere, that's space,
you know, Matt, to be honest, I faked I was sick. I did a Ferris Bueller the day that John Glenn orbited 3 times. Gus Grissom before John Glenn was a disaster, absolute disaster. There's a raging debate to this day that the late Gus Grissom, of course, killed in the Apollo 3 accident, what he did with Mercury 2. And before that, Matt, was Alan Shepard going up, just like you say, Matt, not getting into orbit. But there's, you know, the telemetry of getting someone up safely. And just as important, Matt, it's not like walking down Mount Marcy up in upstate New York. I mean, you got to come back.
I mean, I feel like didn't Red Bull send somebody up to the Kármán line and he jumped out with a parachute?
Yeah.
I mean, a lot of people can go up that high. I think Kaylee Lyons' dad is like a fighter pilot. He flies up there in an F-16. So
they're going to stay. They're going to stay for a few minutes. So give him some credit.
We'll see. We'll have coverage for this today.
Live
right now,
coverage,
he went up on Friday and looked at the climbs of the American employment economy. Tom Purcell joins some RBC Capital Markets today. Tom, I did a chart of the real Atlanta wage tracker. Inflation-adjusted wages are not there. Do you just presume that somehow we get inflation-adjusted wage growth, or is that going to be something we cannot attain in the coming quarters and years?
Well, I think that, first of all, good morning, and hope everyone had a good holiday. I think it something like that is going to take more time than it otherwise would in the context of we have a lot of inflation right now. That the Fed likes to keep telling us is transitory. So I think in the context of these inflationary pressures, I think it'll take time for that idea to develop. But I think what we have to keep in mind is, as we look at wage pressures, they're very present. They are starting to build. I think it'll take time for them to push into more of a positive territory when you adjust for inflation. But no one can deny that we're moving in the right direction. I mean, Tom, you know how it is. Everyone wants everything so fast. This is an idea that takes time.
I mean, the ZEW over where Matt Miller is in Berlin, those expectations came in a little soggy. Is the negative real wage enough to derail, or I should say get us to a 2% GDP sooner than we think?
Yeah, so I think what we have to keep in mind, so I love this question. So there's a couple of ways.
It's my only good one today. Go with it.
I think that there's a couple of ways of tackling this. So I think when I think about the recovery, I think of it in sort of a step function. The first step in that function is this mountain of saving that we're sitting on, and I think that's going to be a critical ingredient to sort of let us see this 10% or near 10% growth rate over the coming year. I think what's then going to happen is that at some point that's going to hand off to wage pressures, which we know are mounting now. And so obviously the step function there is you are going to see some slowing in economic activity. I mean, it's funny. I think, again, people want it so simple. Yes, growth is going to slow, but you're going to slow from, roughly 8% growth in the coming year to, roughly 4 or 5% growth next year, which is still, meaningfully above potential growth. So that step function then going from wages, going from saving then to wages. We think from wages that the next step function is an interesting one. We think that could then hand off to the banking system. Right. I mean, I think if you look at the loans to deposits ratio in the United States right now, it's collapsed, and it's collapsed for all the reasons that you would sort of think, or the reasons you would think it would collapse over the course of a pandemic. And so what's interesting is at some point that's not going to remain collapsed. Right, at some point, there's going to be the banks will then step in. Right, people will start knocking on the doors of banks once they depleted their savings. Once wage pressures start to stabilize and say, hey, I'd like to make that loan. Yeah. And so I think that there's a few steps in the function that could actually really sort of help us achieve, I think, really strong growth for north of potential growth for the next few years.
But what if we do get to that stage, or when we do get to that stage where folks come back knocking on the door, not only, of course, the individuals, but of course, with regards to commercial loans as well. If that happens with rates currently where they are here, what does that mean for the banks here?
Yeah, so I mean, look, I'm not going to get into the sort of the banking sector. I mean, that's for our great banking folks to sort of deal with. But what I would say is, look, even for me, someone who's been talking about sort of more inflationary pressure than is appreciated, right? Stickier inflationary pressure, certainly than is appreciated. I still don't think that yields go that high. I mean, it's not like I'm looking for 10-year yields to sort of, rocket higher from here. Yeah. I think we'll be sort of lucky to be holding a 2-handle on 10s over the coming year. I think we'll be lucky for that to happen. I mean, I just think there's too many factors at play. So
Doesn't that tell you something, Tom, about how the market sees economic growth further out?
No, I don't. I think that I don't think it's quite that way. I think that there are a couple of very important ideas that are sort of weighing on the market, which, again, look, let's be clear. The market, we are all the market, right? I mean, we're all the people that are making these forecasts. And I think that, whoever the quote-unquote market is, I don't think they know any more than any of the economists that, or any other analysts that are building views on the economic backdrop. So what I would say is, instead of some mysterious, hey, the market knows something more about the backdrop, 2 or 3 years out, what I would say is this: I think there are a couple of key things that are weighing on the market, or not weighing on the market, that are stopping yields from really rising materially. Here's two of them. So the first is, I think, we have to keep in mind that we obviously have, countries and central banks that are still engaged in this negative rate experiment. That is obviously something that I think needs to be entertained. We still have bonds that are, negative, yielding negative right now. If you FX adjust our 10-year yield, what you would actually see is that it's very enticing to Japanese investors in particular and to European investors in particular. So I think that that's a factor, point one, that's weighing on 10-year yields. I think the other factor that's weighing on 10-year yields is, I think you have to keep in mind, where's the Fed going with funds? Right, like if you look at their long-run estimate of funds right now, it's only 2.5%. Think back to the last hiking cycle. The last hiking cycle, when the Fed got funds to 2.5%, what was their long-run estimate of funds then? It was 3%. So over the course of the last, call it 5 or 6 years, long-run estimate of funds has shifted from 3% down to where it is today, which is to say 2.5%. So if the Fed finished 50 basis points less relative to their long-run estimate during the last hiking cycle, I think that they're probably going to wind up, and again, not that equation works always, I'm just simply saying I think the Fed has done nothing but chop their long-run estimate of funds. I think that they're going to have a really hard time lifting rates materially north of 2%. Yeah. And I think that is yet another factor that sort of, is acting as a ceiling on 10s.
And the debate here, folks, is on the idea, can they do it in a linear fashion or is it a jump condition at some point? And we'll have to see how that works out. Mr. Purcelli, thank you so much. Tom Purcelli with RBC at Capital Markets. Romaine, it's a research note made for you in the close. John Stolfus over at OPCO, he's been great. He's been a bull. He's been dead on. No question about that. And Mr. Stolfus says, reviewing our target price.
Yes, you're going to hear a lot of this. We've already heard a lot of this, Tom. The general idea here is that the growth story that a lot of people thought was starting to peter out, there's a big reassessment of that. And a lot of people are saying that, look, 4,300, 4,400, that might actually be too low.
Do you see that, Matt Miller?
I'll remind you that our old friend Byron Wien, before the year even started, said 4,500, right? Yep. That was one of his forecasts. It always shocks me how close he is on those, how right he is with so many of those points that he forecast.
We will have to see. We've got much more to talk about here on economics, finance, investment, also Italy, Spain. I believe there's a soccer game with Denmark tomorrow as well. Red Sox are on the West Coast. They beat the Los Angeles Angels as well. That was equivalent to Euro 20. It is a beautiful July 6th. Stay with us on radio, on television. Good morning.
With the First Word News, I'm Rishika Gupta. The price of West Texas Intermediate oil hasn't been this high since 2014. Crude surged today after a fight between Saudi Arabia and the United Arab Emirates blocked a supply increase. The dispute also plunged the OPEC Plus coalition into a crisis, and it left the global oil market without the extra supplies for next month it had been counting on. In Tokyo, the Summer Olympics reportedly will begin before a mostly empty stadium, according to the Asahi newspaper. The government is arranging for the opening ceremony July 23rd to be held with only a reduced number of VIPs in attendance. Originally, about 10,000 people were expected to be allowed. Blackstone president and COO John Gray says it's still a pretty good time for real estate. Gray speaks on a wide range of topics on the first episode of Bloomberg Wealth with David Rubenstein, which debuts tonight on Bloomberg TV.
I think it's still a pretty good time for real estate, and I'd say it for a couple reasons. One is the warning signs for real estate are twofold. Too much leverage, too much capital, and we don't really have that in the real estate system today. The other, too many cranes, too much building. And we're actually below historic levels in terms of new supply.
And Bloomberg Wealth with David Rubenstein debuts tonight at 9 p.m. in New York and tomorrow at 7 p.m. in Hong Kong. The European Central Bank is entering the final stretch of its biggest strategy review in almost 2 decades. Officials are trying to hammer out key differences over monetary policy. A major issue is agreeing to a new formulation of the ECB's inflation target. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
we must be honest with ourselves that if we can't reopen our society in the next few weeks, when we will be helped by the arrival of summer and by the school holidays, then we must ask ourselves, when will we be able to return to normal?
The Prime Minister of the United Kingdom, with the challenges of the United Kingdom, very different than America right now. We'll stay abreast of that story this week. I know Jonathan Ferro, I believe, returning tomorrow, will have much more on that as well. Surveillance correction, I get it wrong. Sometimes the numbers, particularly on a Tuesday, clouded by the extended weekend. I mentioned Apollo 3, and of course the tragedy was Apollo 1 of Gus Grissom, Ed White, and Mr. Chafee as well. Thank you for that note out on Twitter. Right now, and I have a bone to pick with David Wilson, because I'm sorry, it's not NextEra Energy, it's Florida Power and Light. You look at the utility index, and Exelon, that is none of the romance of Dominion or Southern or Duke Energy. Utilities, we don't talk about them anymore. Why?
Well, because they haven't been doing all that well lately, in part. I mean, it's the only one of the 11 main industry groups in the S&P 500 that was down in the second quarter. You know, contrast that with real estate, which you tend to lump together with utilities because you're talking about interest rate sensitive industries, relatively high dividend yields. And real estate was the best performer last quarter among those 11 main industry groups. And that was the first time, actually, since it was broken out of financials. And
is there a why?
Well, I mean, you're really seeing, you know, in this case, a contrast that doesn't make a whole lot of sense to Deval Joshi over at BCA Research. So he's saying, you know, maybe you want to go the other way. Maybe you want to bet against real estate here and buy the utilities, looking for a reversal, especially with the move that, you know, has come up since mid-May. So, I mean, that's really his call. And it's a matter of, you know, with the utilities, you know, you think about it, they're facing competition from solar companies, and maybe their dividends, you know, with energy stocks, you know, having a higher payout, maybe they're more appealing on that basis. I mean, there are any number of reasons why this trade.
We only got time today for one more question. And, you know, I'm sorry, American Electric Power Company, that sounds like a manly company. Sempra Energy, which is Southern Cal Gas, San Diego Gas and Light. I mean, come on, it's San Diego Electric, right?
Well, you know, this has been a process that's been going on.
A process, it's
un-American. A couple of decades. Well, I mean, in your opinion, clearly it is, Tom.
Ameren.
But, you know,
what is Ameren?
You know, I mean, to some extent, these are made-up sort of names because you're talking about companies that own a number of utilities.
Stop. It's a PR exercise to get away from what they really do, which is create energy, right?
You know, you're telling the story on that one, Tom.
Okay.
All I'm telling you is that you got somebody out there looking for, you know, the second quarter relationship to reverse itself, and it's something to watch.
Do more on utilities because we don't do enough on utilities. Okay. NextEra Energy, 16% of the Standard & Poor's utility index. Duke Energy all the way down to 8%. Southern Energy, 7%. So this is a real, it's like almost a tech concentration as well. Right now, we got to go to oil here. Romaine Bostick, bring in Will Kennedy.
Will Kennedy, Bloomberg Executive Editor for Energy and Commodities. Will, we got to start talking here about what we're seeing with the oil market here. I mean, look, we came into this OPEC meeting. There were a lot of discussions, a lot of bets being made here that we would see, I guess, a little bit more restraint here. But I think what we're finding out right now is that the coalition may not be as coalesced as we once thought it was.
No, I mean, I think the word I would use is stalemate. You've got two core OPEC members, traditionally the strongest allies in the Middle East, Saudi Arabia and the UAE, completely at odds with one another and unable to reach an agreement. And what that means in the short term is that there's no more oil coming into the market. The market had priced in 400,000 barrels a day extra oil in August. That was what was supposed to be agreed. It's not going to happen. And you've seen the front of the curve really respond, and oil prices in New York reach a 6 and a bit year high this morning. But what you're really seeing is a short-term boom and a longer-term uncertainty, and you're seeing the spreads between oil now and oil next year really blow out, because in the short term there's not enough oil. But I think the story that we need to focus on is what happens with the UAE, because they appear determined to produce more oil, and those barrels are going to come to market one way or the other, either through a revised compromise deal. Yeah, they have to, because they're leaving too much on the table. They're in their view making more sacrifice than anyone else. So
and they've invested so much, right, Will? Yeah, I mean, they've invested so much, and they need the payoff eventually. So do we see OPEC? Does OPEC need a realignment?
They've invested billions of dollars and they've brought in foreign venture partners to do it, and now they need to keep those partners happy. That's a big part of what's going on here. How it happens, I think, is the story we need to be watching in the coming weeks. Whether there's some kind of compromise as Washington and Moscow put pressure on these two to sort themselves out, or whether there's a more radical scenario where the UAE goes it alone somehow, either producing barrels or, at the extreme scenario, leaving OPEC.
Will Kennedy, away from your work and Javier Blas's work, the technicians have looked at $80 as an important level. Good morning, Chris Verone at Strategas, who nailed this. Will Kennedy, is 80 on Brent a big deal?
I mean, it's a big price. It's a multi-year high. What we're seeing is gasoline prices in the US go way past $3 a barrel on sort of Brent towards 70, which is a big psychological price. Yes, I think it is. I think it's the price where policymakers in consuming countries really start to worry that oils get too hot. And while Saudi is very happy to have engineered the rally it's engineered, I think Saudi will start to worry that the heat on them becomes too much when prices go past 80, because people say this is more than we're willing to pay. And then it adds to the whole inflationary discussion that we've been having in recent months, Tom.
Will Kennedy, thank you so much. Amazing to see the dollar differential between American oil and Brent crude as well. Our executive editor for energy and commodities. There, Romaine Bostick. I really want to get out front of Chris Grissom here at the top of the hour. For folks for Global Wall Street, we're really going to dive into the equity markets to start the 8 hour strong. This polarity, Romaine Bostick, between big tech and cyclicals, it just won't go away. It's almost a barbell.
Yeah, we could talk about barbells later, but there's certainly this idea here that when you're looking for growth, you're looking for healthy margins, and more importantly, Tom, when you're looking for a little bit more resiliency in this market, you could find it there. That's why we saw that rotation back into it. It'll be interesting to see that if we do see a little bit more embrace of the cyclicals, and we're starting to see a little bit of that now, whether that comes at the expense of big tech the way it did earlier this year.
Romaine, we have to stop the show.
And
this is a stunning headline coming out from China.
Absolutely.
Weibo chairman, state firm plan to take Weibo private. Now, this is a Twitter equivalent, is that right?
Yeah, you can more or less kind of a mashup of Twitter, Facebook, and they also have payment systems as well tied to it, sort of one of these super apps. I mean, look, this is huge here, and we don't know if it's directly connected to some of the regulatory issues going over there, but there's going to be a lot of speculation here for this company to be taken private, not only by its chairman, but keep in mind, by a state-owned firm. Also part of this, you're seeing the ADRs here in the U.S. up 20% right now on this deal.
And David Wilson's still with us. He was working on his morning coffee here. David, you've been doing this for 30 years. Flat out, we've never seen this before.
Well, I mean, I wouldn't necessarily go that far, because we've seen it to some extent with Chinese companies where they've gone public and then pulled back and been taken private. I mean, you have to bear in mind Weibo here in the U.S., and you got to wonder, I mean, especially in light of Didi, whether there are going to be more companies deciding to get out of the U.S. markets.
David Wilson, thank you so much. We'll continue on this story. China going private.
%25 of the world is vaccinated, so I think this reopening story is only just sort of beginning.
Businesses have been ready to reopen faster than workers have been ready to come back.
I do think we're far enough along that a lot of that scarring should begin to dissipate.
We've missed on inflation for so long that the Fed is really focused on achieving its inflation target.
We're going to experience something that I don't think the markets are quite prepared for, and that is a potential contraction in personal incomes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. John and Lisa off today. An exciting Tuesday morning. We thought, well, coming out of the holidays, sleepy, get into the week, and earnings season next week. Matt Miller in Berlin and Romaine Bostick joining me in New York as well. And we need to rip up the script. We've got the right guest here at the top. Chris Grissom will join us sooner with MAI Capital, their chief U.S. equity strategist. It's about data, they tell me, Romaine, but I'm sorry. China China going after finance and capitalism.
Yeah, this is going to be the big talk here because obviously we came into today talking about Didi, which had a great IPO last week. And of course, they were immediately cut down to size by chatter out of Chinese regulators. And I guess what is being sort of wrapped in the veil of data privacy concerns. Now we have a headline, this on Weibo. Of course, this is the big social media site over there in China, which came to the U.S. market back in 2014. That company now planning to go private. This according to a source, sources familiar with the situation in a story by Reuters saying that the chairman and a state investor are in talks to take Weibo private for about $90 to $100 a share. That's why you're seeing the shares, the ADRs, I should say, bid up here by about 40% here in the pre-market. And this is going to cause a lot of discussion, Tom, right now about the influence of Chinese regulators right now on these publicly traded Chinese stocks and whether these companies, and more importantly, whether their executives want to remain in the public sphere.
The ADR in 2014, it's $17 a share. We closed out at 54. And the spike up for all on radio, all you need to know is 54 to 70. And just in the opening credits of this hour of surveillance on radio, on TV, we go 70 to 77. And Matt Miller, this is really destabilizing. I remember when you were doing Bloomberg Rewind years ago and we were celebrating Chinese capitalism. What a different story in this 2021.
Yeah. Yeah, absolutely. It does look like they want to get a handle on, especially their big tech and fintech companies, because we've seen this happen, obviously, with Alibaba. We've seen this happening with Ant Group, Didi, as well as a number of companies that SoftBank has some control, and Alibaba had 32% of Weibo in its IPO. So these are a big web of connected tech companies that are all getting
absolutely, Matt. And the reverberations from this today are going to be amazing. We should just point out real quickly here, Tom, pretty much every big volume mover right now in the U.S. pre-market is a Chinese stock or some stock linked to the Chinese markets over there.
Stay with us through this, and we can see that, you know, the U.S. ownership of this ADR, this is the domiciled rights. They're out of Cayman Islands. This is typical Chinese business. They come over here where we can trade them in America. Invesco 7%, Alibaba 7%, Morgan Stanley 5%, Wells Fargo 3%, and on and on. We got the right guest at this moment. Christopher Grisanti of MAI Capital is a great student of the equity markets, looking for value within growthiness. Now, Chris, do you own any of these Chinese companies?
We don't, Tom. We think there's a lot of opportunity here that's just much simpler. And if I were a Weibo shareholder, I would be afraid. I hate to use this analogy, but I think Hong Kong was frankly taken private several months ago. And it's an issue of control. I think it's not data. It's about controlling the most important political and corporate entities in the country.
I think you and I are on the same page on this. Your job is to talk about it. My job is to ask the questions. I will. We spoke to Richard Haas of the Council on Foreign Relations in the last hour about an America in disarray. Is this a Beijing, Chris Grisanti, in capitalistic or financial disarray?
No. In fact, Tom, I think it's a Beijing that's exercising its strength, and it's perhaps taking advantage of an America in disarray, but it's also exercising its strength in its own playground. So I would suspect we'll see more of that in the second half.
Let's talk. Yeah, Chris, I am curious here about what the effect this could potentially have on American companies. There's been a lot of reports about some of the issues Tesla is having with regards to its relationship with Chinese authorities. Obviously, Apple and the iPhone basically wouldn't exist without its relationship with China here. Is there a point where U.S. investors, European investors need to start being worried about the ties that those countries and those companies in those countries have with China?
Yes, I'm only half joking when I say yes, there's a point, and it was last year. I really think what this exhibits is a flexing of muscle much more overtly than we've seen in the past. But clearly, I don't even think the Chinese have been trying to hide the ball. They want control over just about every financial transaction and corporate move in the country. So I think it's a tough place to do business, as the major tech companies have been finding out.
It is a tough place to do business. It's also a relatively lucrative place to do business
Right.
based on the size of the population and, of course, the growing wealth there. For a company like Apple or any sort of big tech company that wants to have a presence there, how comfortable are you, Chris, as an investor in some of those U.S. names and being exposed to that Chinese market?
Well, not terribly comfortable. I'd say what we try to do is pick those that can survive. Facebook is a perfect example. Without it, even though, as you mentioned, it's such a terrific market that the rest of the world still dwarfs China by itself. So a Facebook, a Google have been doing pretty well without towing the line and basically having been mostly excluded from the marketplace. So we like that.
Yeah, a number of those companies actually threatening to pull out of business in Hong Kong if they have to toe the line there. Is that a concern for you when you look at the international companies that you're invested in, how they do their business in China, how they manage that balancing act?
Of course, it has to be a concern. And I'm a great admirer of Richard Haas's. And I think the black swan that we may be seeing over the next few years is a real kind of hot confrontation with China, and that very much worries me. So again, I would it's on the negative side of a balance, those companies that have China as a large piece of the pie for revenues and profits.
But more and more, that's got to be all of the big companies you're invested in. If I think of the big banks, if I think of the big cyclicals, the car makers, the equipment makers, if I think of the big tech companies, they all have to do business in China. It's their biggest, fastest growing market.
Well, I wouldn't go quite that far, actually. I think Facebook is frankly excluded from China. Google is mostly excluded from China. And they're doing, pretty darn well. So I'm not saying they can, obviously they'd be able to grow a lot faster, but they're doing okay as it is now. But having said that, we can't keep on going like this with, a divided world of people who can and people who can't. So there's a resolution coming. I'm just not sure it's a happy resolution.
Chris, we're not having the normal Christopher Grisanti interview, which is a good and beautiful thing. Thrilled to have you on with this breaking news out of China. But to bring it back to something you've been expert on and profited on, and that is Apple Computer. I believe, A, Apple has manufacturing facilities in China. I believe, B, Apple has a lot of revenue coming from China. Is Apple shares or your confidence in Apple shares affected by what China does with Chinese stocks?
Now, how can they not be, Tom? But I would say even greater, we're not super positive on Apple as opposed to other alternatives in technology space, simply because at the end of the day, most of its profits still come from iPhones. So look, I love Apple. I love Tim Cook. It's just an expensive stock at over 30 times earnings when I can get a faster growing non-hardware stock like Facebook selling in the low 20s times earnings based on next year's earnings. And so I just think there's other better ways to play tech growth than Apple at this current time.
We'll leave it there. Chris Grisanti, thank you so much on China, particularly this morning with MAI Capital. Overlaying on this is the land of Richard Haas and international relations. The German defense minister right now rejecting Chinese claims in South China Sea. This is Karrenbauer condemning China on human rights as
nice job.
well. And that folds right over, Matt Miller, into the combined tensions here of Beijing and their tone on Chinese capitalism and wealth creation into the international sphere.
Yeah, absolutely. And of course, don't forget that Merkel, Macron, and Xi have just had a conference together or continue to talk about how they can better do business. So it's really interesting that Annegret Kramp-Karrenbauer is issuing a statement about China on human rights. Her boss needs Xi to be in a good mood, you'd think, when they talk, right? So there's so many moving parts here, but I thought Richard Haas was brilliant on this earlier. Berlin has to be able to work with Putin and Xi, and that doesn't make Berlin an easy partner for Biden.
Right. Let's bring it back to the finance on radio and television. If you're joining us now, it's been an interesting Tuesday after a 4th of July holiday, but shaken first by Didi announcements, stock down, and then Weibo announcements, stock up. Romain, would you even want to suggest that they're linked announcements?
Well, I don't think that it would be hard to make that link. How about that? That's a diplomatic way of putting it here.
Yeah.
It's not really clear how long these talks have been taking place. Of course, this is based on Reuters reporting here, so we'll see how the reporting shakes out through the day. But I think there is a broader issue here, Tom. The idea of sort of the spotlight being placed on some of these CEOs, the swagger we've seen out of them, and the way that the Chinese government makes it very clear that you're going to do things their way or you're not going to do it at all.
Maybe starting with Alibaba a number of weeks, even months ago, and Weibo now to review that $54 a share as we open the 8 o'clock hour, 70. It's added 10% on there, 77. Reuters reporting some form of privatization of Weibo, the social blog of China, out in the vicinity of $90 and $100, which is up from here as well. Futures at -2, Dow futures at -37. NASDAQ giving me green on the screen this morning. Stay with us. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Oil jumped to the highest price in more than 6 years today. That's after a bitter fight between Saudi Arabia and the United Emirates blocked a supply increase and plunged the OPEC Plus coalition into crisis. The coming days will determine whether the battle will escalate into something as destructive as last year's price war. President Biden and Russia's Vladimir Putin face an early post-summit test in Syria. An agreement over international aid corridors into the country is set to expire this week. At last month's summit in Geneva, President Biden asked Putin to keep aid flowing into Syria. That will require the two nations and other members of the United Nations Security Council to reach an agreement. In the UK, business lobbies cautiously welcome Prime Minister Boris Johnson's plan to ease coronavirus restrictions on July 19th. Still, there's a heavy dose of skepticism. It's good news for pubs and nightclubs, but there's also the issue of liability surrounding infections in the workplace. And that global semiconductor shortage hammered second quarter sales at Jaguar Land Rover. The British luxury car maker says deliveries will be 50% worse than initially planned. Other automakers also warned of a sales squeeze due to the chip shortage. And shares of ride-hailing giant Didi plunged in pre-market trading in the U.S. Chinese regulators have ordered that the company's platform be removed from app stores. Beijing is tightening its grip on sensitive online data and cited security risks as the reason. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Bloomberg Surveillance, and good morning to all of you. Jonathan Ferro and Lisa Abramowicz off. Romain Bostic and Matt Miller with us this morning here on an eventful Tuesday. You know, you come back from the holiday, you get through it, forget about that. A fascinating market this morning, particularly out of China. We are beyond fortunate that Thomas Orlick of Bloomberg is come out with an important story today with Eric Zhu on the 100th anniversary of the Communist Party experiment. I have actually visited the museum in Shanghai, the small, simple building where the CCP was formed 100 years ago. Tom Orlick giving this color in China, the bubble that never pops. And we're thrilled he could advance the story this morning against the backdrop of a new capitalism in China. And Tom Orlick, the new capitalism is simple. We're not going to let you be Western. Are you surprised by Didi? Are you surprised by Alibaba and Jack Ma and the new news this morning of Weibo?
So certainly some really interesting developments, Tom. As you mentioned, Jack Ma getting into trouble last year. Didi with concerns about data, and now the news that Weibo potentially will be going private. I think this speaks to a few trends. Firstly, the Communist Party clearly in no mood to brook any challenges to their authority. But also, I think, some legitimate concerns in China, as in other parts of the world, about the power of big tech companies. And we see the White House and the Congress in the United States beginning to move against some of the big tech giants here in the United States. Perhaps China is actually just a little bit further ahead on that agenda.
How far are we from Zhou and Lei? I mean, Zhou and Lei gets all the credit for opening up Kissinger-Nixon and onward and forward. Clearly the zeitgeist, including in your wonderful effort, is Xi back to Mao. Is that what we're doing within our stocks and our capitalism in China?
That's a really great way of framing it, Tom. I mean, one way of thinking about China is that it was closed, and then Mao, Zhou Enlai, Richard Nixon, Henry Kissinger, in that historic meeting, opened it up. And that was what kicked off or laid the groundwork for China's extraordinary growth story. It was the opening between China and the world, and China's enormous size, which kind of created the conditions for 4 decades of rapid growth. And now here we are in 2021, stories about Chinese firms delisting, stories about foreign executives wanting to exit from Hong Kong. Perhaps the pendulum is now swinging back in the other direction. I don't think we're going to go into a Cold War. The connections between China and the rest of the world are too many, too various, too important. But certainly the trajectory is now towards, or the risk is, that we move in the direction of a more closed China.
Tom, it's a great story. It's the first one I read when I woke up this morning, and I was immediately reminded of Tom because you reference Reinhardt and Rogoff. But the reason you do that is that they point out a Lehman-style collapse could put China into a growth trajectory that looks a lot more like Japan than a COVID-recovering U.S. Is it possible that China has lost decades?
So we've spilled a lot of ink arguing that risks of a China financial crisis are overstated. China has a huge savings rate, which means its banks have a very robust basis for their operations. At the same time, if we're thinking about the US-China economic race, we're thinking about a 10, 20-year time frame, we're thinking about the huge amount of debt which China has already taken on. Clearly, we can't rule out a financial crisis. If that does happen, if we layer a Lehman-type shock onto China's growth trajectory, it really changes the picture. And the picture changes from a clear China overtake, China taking the global #1 spot, to China being locked in a permanent second place.
We all know the size of the workforce is incredibly important. And of course, the demographic challenge that China faces, even though it's so large, is a lot like the demographic challenges that a lot of economies are facing, in that they don't produce enough new kids. The one thing you didn't mention in your story was their military might. And I wonder about that, Tom. How important is it? You know, the U.S. invested a lot in its military and reaped some real GDP growth gains because of it.
Yeah, so, I mean, the story is about whether China will overtake the United States to be the biggest economy in the world. And of course, the Communist Party at their 100th anniversary in Beijing last week tried to sort of tell a story about how that was an inevitable trajectory, how China's rise couldn't be stopped. The reality, we think, is that there's much more risk in there. You mentioned the demographics. We don't get into it in the piece, but clearly there's the potential for military frictions, even military conflict, to derail China's development trajectory as well.
Yeah, but then I always turn back to the economic issues here. The idea that there's an economic power here that even the United States might have trouble really going up against here. You talk about the evolution of China, you talk about the anniversary of this Communist Party and a society that, whatever hybrid model now exists there between communism and capitalism. Is there a sort of a buffer here that maybe Xi and the rest of the Chinese authorities have that will prevent or at least stave off any real challenge, military, economically, or otherwise?
So I think you make a great point, Romain. And here in the West, we have consistently underestimated China's potential to grow and China's potential to solve economic problems. If we look at some of the elements of the big picture, China, a population of 1.4 billion, GDP per capita, currently 20% of the level in the United States, but catching up fast. So China only needs to close a bit more of the gap in terms of GDP per capita with the US in order to take over. That makes China as number one a plausible base case. At the same time, with the risk of globalization, global isolation, with the risk of financial crisis, with demographic drag, with reform stalling, I think China overtake can't be taken for granted. That's the big point we try and make in the piece today.
Tom Orlik, thank you so much. Just a terrific essay there on China, and of course this with breaking news worldwide. He's the author of China, the Bubble That Never Pops. Romain Bostic, some stasis in the market, but I'm going to call it actually a pretty good tape after the jobs report on Friday.
Yeah, I mean, if you're in the U.S. here, I mean, things are actually looking relatively decent here. You're getting, obviously, a nice little bid still coming into the big cap U.S. tech stocks, as well as the energy. That's probably going to provide a decent little lift as we get here through the day. But, of course, a lot of eyes still on some of those Chinese ADRs.
Very good. And, you know, we're scrupulous about surveillance corrections. Very quickly, Matt Miller, gentleman out on Twitter, corrects us in that the Chuck Yeager elevations of pilots is still way below where Mr. Bezos and Mr. Branson will fly into orbit.
Yeah, I have to say I got a lot of pushback on my Red Bull comment as well. I think it wasn't scientifically correct. I believe Bezos is going to go 62 miles up, and it looks like Branson's only going to go 55
There
miles
we go.
up.
Well, that's up
You
a
hate
lot.
to see that.
Stay with us. This is Bloomberg. Good morning, everyone. Bloomberg Surveillance, Jonathan Ferro, Lisa Abramowicz, and Tom Keene. They are off today. Holding me up, Romain Bostic and Matthew Miller as well. Mr. Bostic back from Lenox, Massachusetts, in New York here as well. And Matt Miller in Berlin. Very exciting day. I thought it'd be sort of a snooze fest. I was wrong as well. Romain, help me with the data here. I got red and green on the screen, but I got a NASDAQ and a small cap that lifts.
Yeah, I mean, look, the NASDAQ composite right now, NASDAQ 100 futures right now, up about 0.1%. Similar story here for the Russell as well. You call basically the S&P right now flat on the day. This is basically what you're looking at right now is a lot of those tech names, of course, baked into the NASDAQ, a lot of those energy names baked into the Russell. That's why you're getting the little bit of a pop here. But, of course, I think what's really going to sway the market, we'll see what happens when it opens, of course, is what happens with not only the Chinese ADRs, but a lot of the U.S. companies that are linked to some of these companies as well.
Yield lower, inflation up, which means the inflation-adjusted yield a stunning negative 0.95. To see a negative 1.00, we're not there yet, would be really something and really pushing against the economy recovery crew as well. Right now, on the American economy, and I have to explain this for radio because what we've learned here at Surveillance is in the pandemic, when we do work-from-home shots, they're usually stunning bookshelves, and we all keep track who's reading what, who's on their book. We can't do that. Let me describe the picture for those of you on radio. It is a suburban home, a beautiful apartment, with a staircase and the child protective barrier at the top of the staircase. And in front, in between Neil Dutta and the staircase, is 147 stuffed toys. It's the Dutta trifecta holding court at 5 and twins at 3 and 3 years old as well. Neil, how's that pandemic been?
It's been challenging, I think, like for the rest of us. But look, work from home is going to start soon, and I can go back to trading floor background soon.
You're gonna,
or maybe back into your studio, Tom. I mean, that would be that would be great, also.
Do you have a countdown clock to get back to the office so you could escape the Dutta trifecta?
Yeah, it's been on since June of last year.
As well, let's talk about the escape we're having from this pandemic. A good jobs report. You are the certified optimist. Can you be optimistic that we continue this trend?
Well, I think so. I mean, if you look at the last jobs number, the improvement was really driven by two areas, leisure and hospitality, and then state and local governments, right? And that's important because those two sectors are responsible for about half the shortfall, half the cumulative shortfall since February of 2020. So it stands to reason that we should be optimistic. I mean, we know that demand for leisure is picking up. We know what the TSA data is looking like. Hotel occupancies basically look like normal. And state and local governments are flush with cash. So a lot of people are making this argument about seasonal adjustment factors and things like that, that sort of seasonal noise around June for state and local governments. But I mean, let's keep it simple. I mean, we know that state and local governments are flush with cash, and we know that schools are going to reopen in earnest in most of the country in the fall. So I would think that these numbers continue to revive.
Absolutely. And I'm curious, when you look at the gains that we saw in that leisure and hospitality space, not only in terms of the jobs numbers themselves, but also some of the wage numbers as well, what can we read through from that into the rest of the job market?
Well, in that industry, it looks like there's a challenge in terms of bringing people on. I mean, that's why you're seeing wage growth surge in that industry. And it's, I think, for a variety of factors. I mean, obviously, the UI issue is the most contentious, but I think schools are also a big factor. And I also think the COVID situation is a factor. I mean, people, for whatever reason, are still a little bit resistant to return to the workforce. You know, that being said, what we're learning about, I think, the broader economy is that demand curves shift much more quickly than supply curves, right? Yes. I mean, supply curves tend to be somewhat binding in the short run. And, you know, but I also think that, I mean, why would you still be bearish on supply? I mean, it's going to pick up eventually for any number of factors. Okay. I mean, if you so then that brings us to I guess the big question here about inflation and whether we should then buy into the messaging coming out of the Fed pretty persistently now that this is going to be a transitory event. Well, it depends what you. I mean, in their framework, pretty much everything is transitory, so long as you know, employment is below what they define as maximum employment, and you know, because participation rates are still below the level that we saw before the pandemic, the Fed's going to treat any increase in inflation as transitory. You know, I think you know, over the next 6 to 12 months, we're going to see kind of the reverse of what we saw recently, which is, you know, these sort of one-off factors driving inflation higher. But going forward, I mean, it's going to be the reverse. These one-off factors may be holding inflation down, but under the surface, you see these sticky prices continuing to accelerate. I mean, there was an article on the terminal today talking about how rental inflation is still picking up. Those prices don't change quickly. And, you know, the fact is that rental inflation is picking up, you know, from the lows, basically running at 3 to 4% already. You know, that was something that took several years to do following the financial crisis. So,
but they're not going to come down, right? And Neil, I mean, I talked
exactly.
to
they're not coming down.
CEOs of I talked to the CEO of Siemens a couple times in the past few weeks. I talked to the CEOs of all the big automakers, and they're raising prices because they have higher input costs to pay for. Of course, next year, when the input costs are back to normal, they're not going to lower prices. They might not raise them as much in the future, but the bottom line is you see this inflation not as a specter of what we saw in the 70s and 80s. You're not worried about anything more, I'm guessing, than 3 or 4% in terms of core CPI sticking around for too long.
Well, I mean, it's interesting you put it that way. I mean, inflation will be transitory in the sense that we're not going to have inflation growing at 7% annualized for the next 12 months. But the Fed thinks inflation is slowing to something like a little over 2% next year, right? The issue is whether inflation, how much inflation slows. And if it sticks around at 3%, then, you know, that becomes an interesting discussion at that point. So inflation is going to moderate, and I think that's going to, you know, provide some sort of temporary relief to some of the doves on the committee. But I think the bigger issue is that we're transitioning from really one inflation story to the next, right? The Fed doesn't get a chance to catch their breath, right? So yes, they'll be vindicated in these, consumer durable prices, which will fade, right? Used cars, new cars, appliances, furniture, that sort of thing, as supply chains normalizes. But on the back end of that, we're just transitioning to the rental inflation story, which isn't going to go away anytime soon. People are going back into the cities. Obviously, home prices are surging. So if you're a landlord, what are you going to do? Ask for less rent? Because the underlying value of your asset is going up. So I think that's, it's basically and that's, of course, remember, happening at a time when the labor market's progress is going to be much further along.
Neil, I want to get your take on not monetary, but the fiscal side. Last time I was lucky enough to be on this program with Tom and co, we got to talk to David Rosenberg, and he was saying, look, the elephant in the room is that the fiscal support is just going to fall off a cliff. What do you think about, we can't even agree now a bipartisan infrastructure deal as our roads and bridges are crumbling. We're not going to go back to $5 and $6 trillion fiscal support packages, right? So how does the MMT economy flourish after that?
Well, it's interesting that, many of the people that argue that the stimulus was never spent in the first place are the first to say that it's going to be a big drag on the back end. I do think that what's important is that the excess savings rate remains quite high. So the stimulus that we're seeing could be, could leak into the economy for years. Look, I mean, when there will be a fiscal squeeze, but that's also coming against an improving economy. It's also coming against state and local governments in more, firmer fiscal ground for sort of financial positions. So I don't know that necessarily what that's going to be destabilizing for the economy. Yeah. I think that's a bit of a red herring. Yeah. We always talk about that too. I mean, that's not. Remember, I mean, people were making that argument in 2010. Oh, the fiscal fade is going to lead to a double-dip recession. How did that work out? And of course, now the economy's got so much more momentum behind it than it did back then.
Neil, we got to leave it there. But, I just want to be sure that the Dutta trifecta gets through the day. I think the acquisition of more stuffed toys would be beneficial for those watching on Bloomberg Television. And on Bloomberg Radio, I mean, we just know. I mean, you don't have any Beanie Babies, do you?
No.
Okay, good. It's a Beanie Baby free house. That's good to know. Very good. Neil Dutta, thank you so much.
Thanks so much, Tom.
And we'll have him on again. He had a terrific chart on part-time for economic reasons. We'll dive into that at another time. Right now, Romain, I'm going to have you translate because you're fluent in Mandarin. Weibo pairs gains after saying going private report isn't true. Yeah. This was a report from Reuters. Yeah. That they're going to go private.
Yeah, Reuters had a report saying they were going to go private. Bloomberg reporters reaching out to Weibo, now being told by a spokesperson that report of going private is, quote, not true. Now, they didn't elaborate beyond that or provide any other commentary about that Reuters report here. The shares of the ADRs here in the U.S. had been up as much as 40% pre-market, now pairing those gains. Now only up a measly 10, 11%.
54 to 77 to 60. I mean, it's not a. Let's I guess it's funny, but this is not like GameStop, is it?
No.
This is separate.
And this is a massive company. We should point out. I mean, it has here in the U.S. something like a $12 billion market cap, but when you factor in the shares over there in Hong Kong, elsewhere, this is a massive company, massive social media company. It's really critical here. I mean, it's basically you could compare.
But it's not massive in terms of market cap. Right?
No, not in terms of, but in terms of influence over there. This is a big deal here. And whatever Chinese the regulatory influence is being pressed over there, certainly something to keep an eye on, guys.
We got to watch. This is very important here. Romain Bostic's sliding by with a 4-hour day. And, Romain, Caroline Hyde may need some help because we got Brian Belsky coming up with BMO Capital Markets.
And Matt's working overtime, too, don't
With Belsky, you've got to do a Minnesota Vikings update. I mean, there's no question about it. Romain, what's the chance that Yeah, but I know that, but what's the chance Caroline Hyde doesn't know what a Minnesota Viking is?
She has no idea what it is. I'm sure she knows what's going on with England and Denmark or whoever they're playing.
They wear purple. Yeah. Brian Belsky on the equity markets. That's a must. That's really, really must listen. Maybe he's made an adjustment. Red and green on the screen. Stay with us on radio and television.
With the first word news, I'm Rich Gupta. The price of West Texas Intermediate oil hasn't been this high since 2014. Crude surged today after a fight between Saudi Arabia and the United Arab Emirates blocked a supply increase. The dispute also plunged the OPEC Plus coalition into a crisis, and it left the global oil market without the extra supplies for next month it had been counting on. Starting tomorrow, Germany will make it easier for travelers coming from the UK, Portugal, Russia and India, amongst others. They'll no longer have to quarantine for 14 days, still on Germany's so-called virus variant area list, Brazil, South Africa and Uruguay. In Tokyo, the Summer Olympics reportedly will begin before a mostly empty stadium. According to the Asahi newspaper, the government is arranging for the opening ceremony July 23rd to be held with only a reduced number of VIPs in attendance. Originally, about 10,000 people were expected to be allowed. In Brazil, President Jair Bolsonaro's popularity has fallen to the lowest level since he took office. One of Bolsonaro's allies said he turned a blind eye to an alleged kickback scheme involving coronavirus vaccines. A poll published yesterday says the president is approved by 34% of the population, down from 44% in February. Bolsonaro is up for re-election next year. And the cost of renting a home is soaring in cities across the U.S. According to the real estate firm Apartment List, the median national rent climbed 9.2% for the first half of 2021. That's squeezing the finances of low-income households, and it's posing a threat to the idea that pandemic inflation will fade away soon. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rich Gupta. This is Bloomberg.
I think now as the economy reopens here, I think the shortage in housing will become more acute. And so we continue to like it as a sector to invest in.
Jonathan Gray with Blackstone. This is important. Bloomberg Wealth with David Rubenstein. This is a penetrating interview, really, really on top of where we are into this summer of post-pandemic or coming out of pandemic. John Gray there with some real wisdom. Look for that tonight, 9 p.m. in New York, tomorrow, 7 p.m. across Hong Kong and London as well. Romaine Bostick and Matt Miller in for John Ferro and Lisa Abramowicz. Romaine, where are we on Weibo right now? Do we need to update that?
Do we need to update Weibo? Yeah. Well, I mean, we're basically where we were just a few minutes ago, up about 11, 12%, 61 bucks right here, those ADRs. Of course, we were well above 70 just a little while ago here on that report out of Reuters that the company might be considering going private. Of course, a statement out to Bloomberg News, a very brief statement basically saying that that report is, quote, not true.
Yeah, well, we'll see if it's not true. Always true is Barry Ritholtz, dead on with market wisdom and particularly the joy that he actually runs money, which is a clarifying experience as well. Barry, let me start with that. You have a chestnut report of some of the sins of investing, some of the things to do right. And what I've always found true, which you touch upon, is you can't model out without having real money at risk. Your models are just what they are, models. You've got to enjoy the joy of losing money to get clarity.
For sure. I described in the past folks I've called ministers without portfolios.
Yeah.
It's very easy to be a Monday morning quarterback when you're not on the gridiron, don't have giant linebackers coming at you, knocking you over, hurting you. And in the markets, without feeling that pain of a 30% drawdown,
I've never felt that.
I can't tell you how many people I've met who claim to have been big buyers in the great financial crisis drawdown. They managed the bottom ticket in March 2009. And then again last year in the drawdown caused by the pandemic. It seems everybody is a perfect market timer. It's amazing. You can do that when you're sitting on the couch with a remote in your hand, as opposed to dealing with clients crying, I won't be able to retire if I lose 34%.
Yeah.
And that's really focuses you, to say the least.
Talk about that a little bit more then, about this idea of just kind of managing emotions, both for the passive investor and even the active investor. The idea that, you know, at the end of the day, it is just money, and you have to take emotion out of the game in order to make a proper decision.
Well, let me just gently correct you. At the end of the day, when it's more than just money, because it's people's
livelihood,
retirement, it's their security, it's their comfort level. That said, I have to quote William Bernstein, who is both a neurologist and a money manager. And the quote that has always stayed with me from him is, to the extent you succeed in finance is based on your ability to suppress your limbic system. If you can't do that, you're going to die poor. And that's really very telling. If you can't control your emotions, the greatest portfolio in the world that leads people to panic and dump stocks at the low, well, that's not the right portfolio for that person.
So what about this
How
idea?
important?
Go ahead, Matt.
Sorry, I just want to, how important, Barry, is age? Because, my mother is now, months away from retirement. So in March of 2020, she called me in absolute tears. Meanwhile, during the great financial crisis, she still had a solid decade to go. I don't even think she knew her financial advisor's name. Doesn't it make a difference how far away you are from your nut?
Of course. In fact, your age and your date to retirement is going to determine how much risk you should be taking in your portfolio. And when you look at things like target date funds, which people drag all the time for not being the highest alpha producing models, well, that's by design. The closer you get to retirement, the risk dials back, low producing assets like fixed income increase. And so you're not going to have a disastrous, I'm a year away from retirement and half my money disappeared. So you're trading off, and this is one of the things people forget. Risk and reward are two sides of the same coin. Mm-hmm. If you want higher returns, you have to accept greater risk, and that includes more volatility, greater drawdowns, and the possibility of permanent loss of capital.
All right, so you got this great column, the 10 Simple Money Rules. One of those rules centers around, Barry, the idea of spending. And this seems like such a simple concept, but a concept I think a lot of us have trouble, I guess, doing.
Yeah, for sure. Well, first off, I have to preface by saying I have no patience for the spending scolds who whine at people, never buy a new car, don't buy a latte.
Yeah, thank you.
That's just broad, terrible advice. Yeah. The math is really simple. However much you make, whether it's $50,000 or $50 million, spend less than you earn, pay yourself first, put some money away for, your first needs, including retirement, and you'll be okay. I saw somebody complain about people buying new cars and how they depreciate. And NBA star Kawhi, I always mispronounce his name, Kawhi Leonard, was driving a 15-year-old SUV, and they were lauding that. And my reaction was, hey, modern safety features are so much more important than a $75,000 bill for a guy with a $50 million contract. If he's in an old crappy car and damages his knees in a fender bender, his career is over and that contract is over. So sometimes you have to spend. You can't be penny wise, pound foolish. Mm-hmm. And I keep coming back to it. If you can afford it. If you can afford a sailboat, well, go buy a sailboat.
I'll do that.
No boats.
If you can't,
no boats, Barry.
Don't.
I'm with Romaine.
Leave it there. Barry
That's
Ritholtz.
Danger.
As someone who once bought
Thank
a boat.
you so much,
Don't buy
Barry
a boat.
Ritholtz. An important column. We'll get that out on Twitter as well. Romaine, we got to go back here as we close out to what we're seeing in China.
Yeah.
And it's original, and the overlay is, I believe, President Xi speaking right now. I'm not sure if we have images for radio. Radio loves images.
They do. I'm sure they love that as they're driving. Keep your eyes on the road there. Before, of course, our television audience here. I mean, this is going to be talked about a lot on all the programs throughout the day. Obviously, not only what's going on with Weibo, but Didi, and really everything connected right now to China, President Xi there, and the Communist Party, and how they view the business market, the markets.
I mean, Matt, give us an observation here in Spain, Italy. Save us.
I am hoping, just for the sanctity of my household, that Spain wins.
Yeah.
On the other hand, Francine Lacroix is going to be heartbroken if Italy loses. John Ferro is going to be All of my best friends want Italy to win, but I only care about my wife.
Yeah,
right? Happy wife.
I need the Red Sox to take out the Angels tonight. This just in, folks, as we're talking about boats. I think Romaine Bostic there with wise counsel. One of our viewers, Riley from St. Louis.
Uh-oh. What's
she has some wisdom here. Yeah. Boats are expensive.
Yes. Yeah. It's like, cost you, $1 for the boat and $20.
It's a hole in the water.
It's an original
into which
thought.
you throw money.
There you go.
Stay with us. Professor Garton of Yale University will do an omelet with David Weston. Balance of power.